are showing up in that measured,
Yeah.
the official measures of inflation. But I think in terms of, where we're looking at inflation at the end of 2023 or even 2024, I don't think that changed that much, because ultimately you're still seeing some pretty strong inflation on the services side, ex shelter. And when we look at what's driving that, it still comes down to labor costs. And so that's what's going to make that last mile of inflation a lot harder and a lot more expensive to wring out, is that it's coming from the labor market.
The last mile of inflation, I'm going to steal that from you, Sarah. It perfectly describes it. Frame exactly to a whole number, not a 0.1%. Is the last mile from 3 to 2? Is it from 5 to 3? How do I define that last mile?
I think it's probably from 3 to 2. So we're thinking that inflation will make pretty quick work coming down. So core CPI, I think, can get down to 4% year over year, probably by the middle of next year. But then we're only looking at 3%-ish at the end of 2023, and still probably closer to 2.5% at the end of 2024.
How does the reopening of China affect this?
So I think in some ways, certainly will affect the energy aspect. So that's been one of the real tailwinds to this disinflation that we've seen over the past few months. So to the extent that you do have that activity coming back online, that could prop up the energy side there. But of course, it's also another source of demand. So I think all in all, reopening in China is inflationary. And so I think it makes that glide path down to 2% that Tom's looking at a little bit harder.
This is a lot of nuance, and it comes in the face of some reset expectations of even lower inflation on the heels of yesterday's print. Perhaps it doesn't change for you over a longer term, but PIMCO ratcheted down their expectations for the end of next year to 3.3% versus 3.7%. How does the Fed recognize this nuance while still indicating that they have further to go?
Well, I think it comes down to some of the messaging that we'll see today, both in terms of the statement. So Jonathan mentioned the ongoing increases. I think that aspect of the statement is likely to stick around to signal that the pace of tightening is really only one element of this tightening cycle. It does depend on the overall destination as well as the duration that policy is held there. And so I think we'll see some signs of that in the statement, in terms of also just saying how long restrictive policy is likely to stay around. So maybe putting some time references around that, saying it's likely to be restrictive for some time. But it also comes down to Tom's beloved dot plot. So the fact that where the end of 2023 dot ends is,
that's something,
we think
Sarah, that's something John Sylvia would do. I don't expect that from you.
Hold on a second, but let's talk about that dot plot, because yesterday the Fed could potentially have revised their dot plot submissions until the end of the day after the CPI report came out. How unusual would it be for them to change their expectations for how high the Fed funds rate would be after this data point, one day before the press conference?
So while they have that opportunity, I'm not sure how many officials will be taking it. So maybe it affects what they end up putting for their year-end 2022 PCE and core PCE numbers, maybe their year-end 2023. But ultimately, this was just another print. So yes, it's coming on the heels of what was also a good October print, but that followed a hotter September one. And I think ultimately there's still so much uncertainty around this inflation outlook. If you look at, buried in the summary of economic projections, you have where officials see the risks to their inflation forecast, and 17 out of 19 officials are still saying that those lie to the upside. So I think they're going to be pretty cautious on marking down their expectations too much based on what was a better number, but there's still plenty of signs that inflation is still running too hot.
Sarah, time is on my side. It's a Rolling Stones Federal Open Market Committee, and the answer is they have to get out somewhere in the next year to really reframe that timeline. I'm looking at the calendar. John, help me here. May 3rd, June 14th, July 26th next year. What meeting are you focused on to where Jerome Powell finally gets clarity, if you will, or confidence on that last mile?
So I think it'll be a while before they get that confidence, but I think what they're going to be confronted with is much more deterioration in the labor market. So it's been easy to go full force on inflation this year because you've had an incredibly tight labor market. We still have a very strong labor market, which is allowing them to continue these rate hikes. But I think that discussion is going to get very difficult around the middle of next year, where you have inflation coming down, still too strong though, but you're seeing much more market deterioration in the labor market. So unemployment over 4% and very likely outright job declines in the second half of next year, which is going to put the Fed in a very uncomfortable position where they do have to trade off between their two mandates of price stability and maximum employment more so than they have had to this past year.
It's going to be a fascinating 12 months ahead, that's for sure. Sarah House of Wells Fargo. Sarah, thank you for this morning and for the whole of this year. To Sarah's point, just to pick up on something she said there, the characterization of the balance of risks, I think, is going to be super important.
Yes, agree.
On inflation, do they still believe that risk is skewed to the upside? We'll see about that a little bit later. And I go back to a question I've kept asking over the last several months. When they look at the balance of risks around under-tightening and over-tightening, do they still believe the biggest risk, a bigger risk, is doing too little versus doing too much? Because I heard a little bit of a shift in the last couple of times we've heard from Chairman Powell. In the news conference in November, I think almost emphatically he was focused on the risk of under-tightening. And he talked about over-tightening and asymmetric risk and this idea that if we do over-tighten, we can do something about it. We can cut interest rates. Then all of a sudden at Brookings, and I don't know if this was deliberate or not, so we look for confirmation of that in the news conference, he started talking about not wanting to over-tighten. Now, maybe it was the forum, the setting that we got all academic and nuanced about the economy, about inflation and about Fed policy in a way that maybe he wouldn't in a news conference. But that's the one, Lisa, I'm focused on a little bit later this afternoon.
It's difficult, though, for him to come out with any conviction whatsoever, right? And this is the issue with him doing nuance. Right now, if he doesn't do some sort of hawkish message wholesale, if he tries to give nuance, that will be read as dovish. That will be read as they're ready to cut rates next year. I mean, honestly, that's how it's going to be read by markets.
That's what they're up against.
And he has to realize that if you take a look at the underpinnings, and this is why Sarah House was so cautious, saying it is just another print, the sticky aspect of inflation is still at the highest level in 40 years. The services side of inflation still at the highest in 40 years and rising. Raises a question.
I'm going to bring this up with Richard Clarida of Columbia. Rick Mishkin wrote a paper 15 years ago, at least, on Japanese deflation, and what it came down to was the asymmetric pressures, John, the Bank of America, Bank of Japan, I misspoke there, the Bank of Japan faced. And, you know, to me, this is germane. And Neil Sauss, who invented Credit Suisse economics, Neil Sauss was heated about this, measuring the asymmetric pressures that you accurately state right now.
I'm pleased you brought up history, Tom, because I think we forget that these are human beings conditioned by history and recent experience as well. You wonder how scarred they are by the dovish mistake of the last 12 months and whether that shapes perhaps an approach where they are committed to being a little bit late, Tom, because they don't want to repeat that. The last thing they want is this flip-flopping repeat of the 1970s where they back off too soon and we get a story of inflation reaccelerating. And ultimately, Tom, they might be up against that risk into next year.
I'd even be more bold, John, and say it's not just an overview of years. It's an overview of one single mistake, which is Bank of Japan 18 years ago, I believe it was, off the top of my head, where they just cut too soon, had to reverse.
BOJ talking about a policy review, maybe.
After
into
Croto
next
leaves.
year. Did you see that?
Yeah, after Croto leaves. Did you see that?
Yeah. Croatia's talking about a policy review.
Let's see what happens with that.
So is Italy. They're in their policy review.
Why
right
are you
now.
taking a dig
When
at
do
the
they
Italian
start their new effort
national
for 2024?
I wonder
When's the first game?
Why was this the appropriate time to take it?
When do they start the new surge for 2024? Is it like in 6 months?
Right now, we're raring to go. I'm a consultant.
Are you?
Yeah. Got things to say.
He consults.
I consult. Coming up, Terry Haynes, the founder of Pangea Policy. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. It could be a long legal battle to get Sam Bankman-Fried back to the U.S. to face fraud charges. The disgraced co-founder of crypto exchange FTX told a judge in the Bahamas he plans to fight extradition. It was Bankman-Fried's first court appearance since his arrest Monday night. The judge denied his request to be released from custody on bail. The U.S. is set to fulfill a key demand from Ukraine. Once there's a final approval from President Biden, the Pentagon will send Ukraine Patriot air and missile defense batteries. Ukraine says Patriots are needed to counter the relentless barrage of Russian missiles. The president of Latvia is calling for a special tribunal to judge Russia for its invasion of Ukraine. Egils Levits also told Bloomberg that Russia should have to pay for reconstruction.
It's the gravest possible violation of international law, and there should be consequences. And one of the consequences is the seizure of Russian assets abroad, and it's necessary then to give these assets for a fund or in another way for a rebuilding of Ukraine.
Western countries froze Russia's central bank assets after it invaded Ukraine in February. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bankman-Fried and his co-conspirators stole billions of dollars from FTX customers. He used that money for his personal benefit, including to make personal investments and to cover expenses and debts. This investigation is very much ongoing, and it is moving very quickly. I think it's fair to say that by anyone's lights, this is one of the biggest financial frauds in American history.
That line right there. This is one of the biggest financial frauds in American history. That was Damien Williams, the U.S. Attorney for the Southern District of New York. As for the timing of Sam Bankman-Fried's arrest the night before he was set to testify, being questioned, Terry Haynes of Pangea Policy saying it was a case of the DOJ Bigfooting Congress. He writes the following: DOJ's action might have the effect of politicizing crypto investigations of malfeasance. Some Republicans are likely to wonder why the Biden DOJ swooped in to controlling the investigation of the second largest Democratic donor, Tom, in the 2022 election cycle.
We introduce him differently than we ever have before. He's Terry Haynes. He talks to us about Washington. He has a wonderful and different prism here. But also, he is a grizzled veteran of all the chit-chat the media is doing right now. In the vicinity of 2002, Mr. Haynes provided general counsel services to House Financial Committee under Mr. Oxley, I believe it was, on scandal. The extinguished veteran Terry Haynes joins us this morning. Terry, is this different than what you witnessed in the early part, long ago, of this century?
Well, it's not. What's different about it is, Tom, frankly, is the market impact. I think what people forget about the Enron and WorldCom scandals and what made necessary the Sarbanes-Oxley Act, is that markets started to view it as an attack on the ability of markets to understand, the books, the solvency, the prospects of publicly traded companies. They figured, if Enron went down and then WorldCom did this very simple fraud, what's next?
Right.
It was really destroying wealth and value. We don't have that situation today, so it's much different in that regard.
John and Lisa want to jump in here, but Terry, I'm going to cut to the chase. The what next is called Binance. How should Mr. Gensler, how should CFTC, how should the politicians you advised years ago, now should they do on the what next of Binance?
Well, Congress, let me take Congress first and then the regulators. Congress, created the regulators, oversees them, all the rest. So, my view here is Congress, is kind of the top of the food chain. Congress doesn't know much about crypto, doesn't know much about Binance, but what I got from the hearing yesterday is Congress thinks this stuff is a scam, and even people that think there's promise in it, they think that the actors are a scam and they're running away from it as quickly as they can. What Gary Gensler and others were saying yesterday, very simply, was, no matter who you are in this space, we're coming after you. And so whatever's going on at Binance, Gensler is going to use the maximum amount of his power to try to bring them to heel as quickly as possible. I mean, that's the bottom line.
Yesterday, we saw resilience in terms of the shares of crypto companies as well as Bitcoin, which continues to rise today. This goes against what you were saying, where you said that this does not look like a bad moment from which crypto can recover. It's much likelier to be the beginning of the end for crypto. Why do you say that with such confidence, given the acceptance that the market has had of what has just transpired without some sort of massive disruption?
At least I think what you've got here is a kind of a perfect storm. You've got a situation where you've got, what crypto is looking at in the future is years to come of investigations, potential indictments, and certainly enforcement actions, number one. Number two, what you've got a situation where crypto is going to be busily enfolded into the existing regulatory regime. The Biden administration regulators have been after this for about a year. They've been really public about it, but crypto people on Wall Street haven't wanted to believe it. Well, as of yesterday, they should believe it, because that's exactly what Gensler and others are going to be up to. When you combine that with the possibility of crypto exposure from more established players, what you're going to get is a continued flight of capital, and people are not going to want to be involved with something that looks like it's a potential scam that might get them in some fairly serious trouble. So an uptick in all this, given the last year that crypto's had, is certainly possible, but this is not going to be the force, not going to be the game changer anybody ever thought it was going to be.
Terry, we started by talking about your comment about the strange timing that the Department of Justice didn't give a heads up to Congress ahead of releasing this indictment, also with the SEC. You've had extensive work with both the SEC and the Southern District of New York with some of these investigations. Do you believe that it could have been politically motivated?
I raised it as a possibility. Do I think it's likely? I certainly hope not. But what has happened here beyond the bottom line politics is very simply that the regulators and the litigators decided together that they were going to push this thing forward and shove Congress to the side as much as possible. The SDNY was very specific about bringing up the campaign finance activities of SBF. The implication there is that Congress is somehow unable to strongly investigate this stuff because they had taken money from SBF, FTX, crypto more largely, I think that's dead wrong, by the way, but that's an implication of it. And so what we're going to get here is we're going to get a competition between the regulators and the litigators on the one side and Congress on the other. I think that's unfortunate, frankly, because it strings out much longer the resolution of a lot of crypto issues.
Hey, Terry, great to catch up, sir. As always, Terry Haynes there, founder of Pangea Policy. One stock to have a little look at, Delta in a pre-market, doing nicely, flying, excuse the pun, raising their December adjusted EPS guidance. Do you like that?
Poetic.
There's a decade of journalism behind that one, Tom.
Yeah.
Delta up by...
And consulting.
Yeah, consulting too. Up by about 4%. Can I get to the numbers, guys?
Please, let's go.
Please.
Okay. Fourth quarter adjusted EPS, 135 to 140. If you look at the full year adjusted EPS now, $3.07 to $3.12. The estimate was $2.89. So better. They see 2023 adjusted EPS at $5 to $6. The estimate $4.75. So they're raising their profit outlook going into the end of the year, Tom, and going through 23 as well.
I'm going to go into this. This is important, folks. Bring up this banner, Amy, as you can. This is important, John. They were running a run rate of $47 billion before the pandemic. Look at the crater, John. On radio, they went down from $47 billion to $17 billion large. They're back to 45-ish billion, John, and with some significant 2024 optimism. Ed Bastian joined us years ago, and he nailed it. He said domestic will come back. He's waiting for international. Now's when international happens.
I remember Scott Kirby over at United
Same thing.
saying the business would come back. I remember sitting there thinking, oh, that seems a little bit overly optimistic, and he was right too. Let's see if this demand holds up at these prices through next year, Lisa, because demand has held up at some pretty punchy prices.
And it just keeps rising. I mean, Tom has what, the airline ticket index of his own.
He gets notifications.
He gets notifications. He looks at it whenever we talk about deflation. He's like, oh my goodness. But at a certain point, you have to imagine there's pushback, especially because there are other changes. Like, for example, Delta, it's lounges. Everyone was going to the lounges because of different perks, and you could actually buy tickets. Now they're cracking down on that because it got overcrowded.
Good.
Oh, you what? Because you'd want the riffraff out?
No, I just know.
Is that what you're saying?
No, they were your words. They're certainly not mine. I just think it got too
Please
busy.
consult.
Got too busy.
I know. Well, that's their
too
concern.
busy.
Well, they would agree,
It's the
which is the reason
volume,
why. Yeah, I
not
mean,
the
this
kind.
is okay, but
Just
there's
be very
there's
clear about
also
that.
a question of how much longer people will accept less to pay more, and that is what they
hear
have
you.
continually gotten. Also, another question: will some of these airlines reinstate dividends after cutting them in response to public pressure when they really were under a lot of heat and had to get essentially bailouts from Fed policies?
Come on. The benchmark here, and this is Delta Airlines to Paris, I'm thinking after Davos, and the basic idea here is it used to be 3,000 to 4,000, you could get the fam on board and not kill yourself. Let's say, John, you go over with, the fam.
Sure.
3 people, you're popping $22,000 to get to Paris.
Serious money.
3 people.
Who's the third person?
I don't know. Take the dog.
Someone I don't know about next year.
Right there. His name rhymes with from rain.
Peter Cheer.
Oh, yeah. Me and John and Vic. Oh,
Surely.
baguette.
Yeah. Oh, God, that's just gold.
We're not going to France.
Yeah. You're going to Rome. No, Southern.
I'd like Rome.
And please, Rome passes your test.
Yes.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. We started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is like you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And like frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct to consumer. Like I want to build out a true consumer empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Of politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
The secret of success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. You know, how do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
We're looking at 2023 as a big transition year.
I think 2023 is opening the door for a recession.
There are concerns, obviously, of a shallow recession.
This recession is the most anticipated recession of our entire lifetimes.
We think not that we will avoid necessarily slow down, mild recession, but that will help underpin a milder, shorter recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Everybody's talking about recession. Delta Airlines, like, what recession? Looking out to 23.
Yeah, exactly.
From New York City this morning, good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and on radio. Fed decision coming up a little bit later. Tom, Delta Airlines in a pre-market up by more than 3%, raising their outlook, looking ahead to a better 23.
We call that Air Dutta or Air Glassman. These guys in the economics racket, and Jerome Powell, I know, pays attention to them, and frankly, I think the chairman's an optimist as we go to the Fed meeting this afternoon. The glass is half full, and it's led by our behavior off of this pandemic. I would suggest respectfully, John, it's not just the airlines visible, reportable, and that. It's small business America and the rest are like, I need to hire people. Let's go. That's what I'm hearing from a select group of economists.
How sticky is that behavior, Lisa, going into a new year?
Well, considering that it is very different populations that we're talking about, just to give you a sense, Delta is saying that their profits may rise by 15 to 20% next year. An incredible figure considering how much their profits have already boomed and how much their demand has increased. JetBlue, Alaska Air, Spirit Airlines, some of these other airlines that cater to people that might not have the same kind of pocketbook of those that fly Delta, not doing as well. Again, there are pockets of less price freedom in certain areas, and how much do we see that trickling into the broader economic metrics?
I love JetBlue. Great cabin. Big fan.
Mint, you mean?
Yes, that bit.
Yeah, you mean the first class?
Tom as well.
Yeah.
That offering to London, we could talk about that another time.
It is nice.
I want to talk about this market, Tom, going against this decision.
A travel show?
Apparently a World Cup show and everything else when you're directing things.
Come on, you know, Chairman Powell looks down and looks at the prepared questions. He's going to be looking like this today while he's doing it.
So last time around, we had an interesting moment in that news conference. There was a moment where someone accidentally led the chairman to believe that markets were up. And that moment for me wasn't about the individual that did that in the news conference. It was about how Chairman Powell responded to it. Chairman Powell, on a day where he believed this equity market was rallying, pushed back against that pretty firmly. And I wonder if we get the same Chairman Powell in this news conference after the CPI print we had yesterday morning.
Tattoo this to your brain. Negative 0.580 standard deviations. That's a Bloomberg Financial Conditions Index. Federal Reserve Bank Chicago's got a great number. John Goldman Sachs has a great number. They're all the same. They're a soup of ratios that try to gauge the accommodation or restrictiveness. This is not going in the chairman's direction.
Like relationships, Tom, top tip, never tattoo something to your body that might change. You can't tattoo price
Is there
actions.
anybody in the World
Come
Cup
on,
that
Tom.
doesn't have a tattoo?
I mean,
Do you have a tattoo that you
noticed
regret?
No, I do not.
That was exactly what I was wondering. Come on.
What's that about?
I don't know. You're the culture made video. What do I know?
It's called a sleeve, Tom. Get a sleeve. Everyone gets a sleeve done. You know how long it takes to get a sleeve done?
Tell us, John. How long did it take
I'll
your
show you
sleeve?
mine
Yeah, exactly.
in the Fed decision a little bit later. Equities unchanged on the S&P 500. We
Look at those markets.
Like this. Take a look at them. In the bond market, yields unchanged on a 10-year, 349.92. Euro dollar, stronger euro, just about euro dollar, positive 0.2%, 106.51. And Lisa, crude making a comeback. We were threatening to hit the 60s a little bit earlier this week, back to $76 and about 15 cents.
Remember when we were talking about how everything would change whether or not China reopened or not, and all of a sudden China seems to be throwing caution to the wind, reopening in full, and oil prices are still under $80 a barrel. So it's sort of shocking there hasn't been more of a move, frankly, especially as we see a wholesale abandonment of COVID zero. Today what we're watching, 10 a.m., we get the Senate Banking Committee hearing on FTX and the Sam Bankman-Fried debacle. He has been accused of 8 measures of fraud from the Southern District of New York, could serve 115 years if convicted of all of the crimes. I am still looking for what type of pushback to the entire crypto industry we get from senators versus just talking about one bad actor. At 2 p.m., we get that Fed rate decision followed by Fed Chair Jay Powell's press conference. How much does he push back against some of the reset in markets? We talk about the 2-year, we talk about the 10-year. 5-year yields have come down by more than 80 basis points, almost a percentage point from their peak earlier this year. Kind of shocking. We will speak about this with Rich Clarida and Diane Swank for our Fed special, and at 2 p.m., France versus Morocco, which I'm sure we will not be touching at all.
Not at all. We won't talk about that whatsoever. Peter Cheer joins us now.
On radio, great shot of, what is he, 35?
At Academy Securities.
30,
He's got
like
better
awesome
in the last couple of years.
Yeah.
That's what happens when you go
Morocco's
to AC Milan. You just get better and better.
On radio, these images are
More consulting.
I mean, it's like great.
I'm consulting with Milan as well. That's true.
Can Morocco do better? Seriously, can Morocco do better than Croatia?
What, last night?
No,
collapsing.
can they? But just are they a different
I think
kind
we
of
want
team?
a more competitive game. Fantastic defense. Morocco really surprised me at the back. Really surprised me. Can I get to Peter now?
Peter's like, why am I not?
Peter Cheer, you're not here to talk about the World Cup, so let's talk about this market. Can we start with Chairman Powell? And I think we're going to shift towards what's happening with Bitcoin and what's happening with crypto and FTX, etc. a little bit later in the conversation. What are you expecting, Pete, from the chairman in the news conference?
So I expect him to go 50, but I expect him to downplay future rate hikes. I think he's going to talk about having to be cautious, wait for the data, right? CPI is coming down. This is a person who thought things were transitory a year and a half ago. He got sucked into saying they're not transitory. I think we're seeing some of the pressure that was building evaporate. So I'm really looking for him to set expectations much lower for next year's rate hikes.
I look, Peter, at the dialogue forward, and it's going to be based on a data-dependent Fed. At this point, what is the data that matters to Chairman Powell?
You know, one, we have, I think, 7 full weeks between this meeting and the next meeting. So that's a relatively long period of time. So we're going to get a bunch of data. I think we're watching for jobs. If jobs can hold in steady, I don't think they will, but if that holds in steady, that might be the one thing that promotes, further hikes. Other than that, I think we're going to see CPI roll over. One big component is still OER, and that's got a lag effect. That's going to come down. So I'm looking for inflation to roll over. I think growth is slowing rather dramatically outside of the travel and leisure industry, and that's going to be problematic for him. So I look for weaker data over the next 7 weeks that leads him not to hike next February.
So, Peter, are you basically saying that if he comes out with a more nuanced message and the market rips, as it's been doing consecutively every single time that he hasn't pushed back against the action, that it won't necessarily go in the opposite direction, that the easing in financial conditions won't be at odds with the Fed's goal anymore because we're already well on the way of disinflation?
I really think we've got to stop managing the entire economy to what the stock market does over a day or a week, right? There's so much randomness going on. You've got daily expiration options, weekly expiration options. We've got this huge volatility. So I think the Fed's job is not to look at daily markets, see where this heads out. And I think once we get this recent pop, just a bit like yesterday, the reality is going to sink in that growth is slowing, that there's concerns about what's going on in the global economy, that PE ratios are still relatively high given where rates are. So I think some of that initial exuberance would fade. So I'm kind of looking for him to be dovish. That confirms at the market, so we get another pop like we did yesterday. And then I think I want to be selling into that because I think the pressure on the economy and the recession is going to hit sooner and be worse than consensus.
What about longer-term debt? At a certain point, if the Fed backs away too soon, then people start to worry about stop-start inflation and perhaps a more protracted bout of inflationary tendencies just simply because the Fed doesn't have the conviction to go hard and go long. So at what point are we looking at perhaps a sell-off in longer-term debt on the heels of a dovish message?
I think we might get a little bit of a pushback. We kind of hit my lows. I didn't really think we'd get to 3.5 this year necessarily on the 10-year. We're down in that range. So I think we see a little bit of pressure on yields across the board as the Fed gets dovish. Again, the initial reaction is probably lower yields across the board, but I think we start seeing a steepening of the yield curve again, right? The front end and the belly has to move down, while the back end probably moves up a little bit.
A steepening led by the front end, Pete. Typically, historically, is that a bullish moment or a bearish moment for risk assets?
Everything's so topsy-turvy with this. I think whatever it is traditionally, I do not think that's going to be a great risk-on sort of moment. I think that's where people are we'll get that move, and then people are going to have to really start thinking, where do we want to own stocks? Where do we want to own credit? Yeah. What is the right risk premium? And I think it's probably a bit high right now.
Does 60-40 recover from the mother of all disastrous years?
Yeah, I think it's actually going to do quite well. First off, I still am looking for this whole market to end with a big risk-off move where you see much lower yields and lower stocks. That hasn't been what's been happening lately, but I think that's ultimately where this all ends. And in the meantime, listen, you're getting decent yield on the long bond. I think you're supposed to have that 60-40. You're supposed to have, something in your portfolio. I actually like the belly of the yield curve much better than long dated, but I like that 60-40 concept.
Peter, it's important that you're here after the whole FTX debacle. And before we go, I do want to touch on that. Are you surprised there hasn't been more fallout in the crypto sphere from the demise of FTX and the indictment of Sam Bankman-Fried?
A little bit. I would have thought Bitcoin would be drifting towards 10,000 faster. It's actually bounced a little bit. We're almost at 18,000. On the other hand, I think we all talk about the Lehman moment, and Lehman was never a moment. These things take weeks and months to play out. And the one thing I think that was really important revealed yesterday was the amount of investment that SPF was doing, right? He was just, it seems, investing relatively willy-nilly with no due diligence, but he was probably setting the price for a lot of these companies. So I think it's going to take time for people to pull back and say, okay, what do I own? Where do I own it? Does this make sense? And then the final thing is, I've always said there's 3 rules about crypto. Rule number 3 is there are no rules. And there are a lot of people who are incentivized to keep crypto higher. You've certainly had the Bitcoin maximalists really push this in, people holding their own tokens, cold storage, et cetera, et cetera. So it's not that surprising it's held in. I still think we're going to be at 10,000 before 25,000.
Peter Chair, Academy Securities. Pete, we appreciate that last comment on what's been happening with Bitcoin and the whole universe over the last month or so. Peter Chair, thank you. I want to shift gears in just a moment. Coming up down in Washington, D.C., we're going to catch up with Bloomberg's Anne-Marie. This from the New York Times. Overnight, a story that isn't getting a ton of play, Tom, and I think should. Reads as follows. The United States is poised to approve sending its most advanced ground-based air defense system to Ukraine, responding to the country's urgent request to help defend against an onslaught of Russian missile and drone attacks. This according to 2 U.S. officials on Tuesday. TK, what do you make of that?
I'm so glad you brought this up. I saw it last night, and I said, that's a game changer. That seems to be what the experts say as well, and it's a long way from where we were February, March, April. It's not a long war, but it seems like
sure. But TK, do you think it's odd that we keep having these conversations about an outlook for 2023, and this isn't a bigger feature in them?
Yes, I've said that all along. And you see it. You see it in the Bloomberg EU and U.S. Financial Conditions Index. There's something different going on, and that difference is a war.
We'll break down this story with Bloomberg's Anne-Marie in just a moment. Joining us from Washington, D.C., we're counting you down to a Fed decision coming up later on this afternoon. Equities higher going into that by 1/10 of 1%. Yields going absolutely nowhere. Your 10-year in America, 350.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. FTX co-founder Sam Bankman-Fried plans to fight being sent to the U.S. He told a judge in the Bahamas Tuesday that he will not waive his right to an extradition hearing. It was his first court appearance since being arrested after a U.S. prosecutor filed criminal charges. The judge refused Bankman-Fried's request for bail, calling him a flight risk. The Federal Reserve is set to moderate its aggressive tightening today. At the same time, the central bank is likely to signal that interest rates will ultimately go higher than previously forecast. Policymakers are widely expected to raise interest rates by 50 basis points. The announcement due out at 2 p.m. New York time. In the UK, there's a possibility that the worst of the cost of living squeeze is over. Inflation dipped from a 41-year high in November. Consumer prices rose 10.7% from a year earlier, down from more than 11% in October. British households are desperate for relief after a big jump in energy and food bills. The Biden administration is about to deepen the tensions between the world's two economic superpowers. It will put China's leading maker of memory chips and more than 30 other Chinese companies on a trade blacklist. That would prevent them from buying certain American technology. And Delta Airlines boosted its fourth quarter earnings outlook, but trimmed the top end of a revenue forecast. The new projections came out as Delta executives are preparing for an Investor Day event. Both Delta and United Airlines expect continued expansion despite the risk of recession next year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Policy, politics, from the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Today, a special surveillance will cover the Fed's last rate decision of the year.
We're still seeing a strong economy, so the Fed has to do more.
What's important to me is to see if Powell can keep the ball contained in the goal and not put it over the crossbar.
Keep it tuned to Bloomberg for live coverage of the rate decision and the following press conference.
The average hold at a peak rate was 11 months.
Does this Federal Reserve have the commitment to keep going?
Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
I believe that Russians should stop the fight, should leave our territory, and the war will finish immediately. And actually, I don't believe into the temporarily ceasefire, because Russians will use it just for regrouping, reinforcing, and then they will continue this war.
That was the Ukrainian Prime Minister on what's happening in his country and the relationship with Russia. Here's the latest from the New York Times. They're leading with this overnight. The United States is poised to approve sending its most advanced ground-based air defense system to Ukraine, responding to the country's urgent request to help defend against an onslaught of Russian missile and drone attacks, this time according to 2 U.S. officials in that paper.
This is a big deal. Can I give you a story? Quick?
Sure.
Standing in the hallway at home, and there was a guy named Werner von Braun, who's in an uproar now as the guy that invented the V-2 rocket, which destroyed London. And he had come to America. They brought the scientists of Germany to America, and they had to hide them somewhere, John. They hid them in northern Alabama. And the Patriot missile is from Redstone Arsenal, Alabama. And it's really, really, really good. Basically, this is the only missile that can do what Hollywood does, where another missile goes up and a missile knocks it down, and that's why we're having this conversation. Anne-Marie Horton with us this morning on Huntsville, Alabama. Anne-Marie, this is a huge deal. How will the Secretary of Defense and President move forward on this in the coming hours?
Well, we're waiting. They need to have the sign-off, according to our reporting, first reported by CNN, of this idea of sending these more advanced missiles, these Patriot missiles over. But there was a readout late last night from the Pentagon, and you had the Defense Minister, Lloyd Austin, as well as the President's National Security Advisor, Jake Sullivan, as well as the head of the Joint Chiefs of Staff, on the phone with their counterparts in Ukraine talking about security. And of course, this comes on the heels of all this reporting. But there's a number of questions still that remain to be seen. Of course, there's teams that need to be trained on this. How does that happen? Are they coming directly from U.S. stock? Are they coming from European stock? This is the U.S.'s most exported missile. They're in Poland, they're in Saudi Arabia. And there's another key fact here, Tom. You talked about the Hollywood style of these missiles. Yes, they can go directly to the intended target, but that's the advanced version. The less sophisticated version, the older versions will hit near the missile, near the aircraft. So these are the kind of questions we're still waiting on. What does Ukraine actually get?
How would Mr. Putin respond? I don't want you to play missile analyst here, Anne-Marie, but does he have an equivalent non-nuclear Patriot missile?
Well, what we do see from Russia is that they continue to just go through their weapons. And what Putin really is going after now, and what we've seen, and what Professor Hal Brands talks about in Bloomberg Opinion, is Putin's strategy for the winter, which is weaponizing the winter, which is basically what he's doing with Ukraine, going after civilian infrastructure, making sure there's a power deficit in Ukraine, making sure they don't have access to energy, access to clean water. So this is what Putin is doing. This is why President Volodymyr Zelensky has really begged the United States for these types of missiles so that they can stop that barrage, especially going into the winter. And I think really going into the winter is a key factor of why you're seeing this, and potentially this could signal a change from the West in terms of their help to Ukraine.
Well, that's exactly where I wanted to go. This idea of an escalation, we've been talking about that for a long time. Is this viewed as an escalation that more directly brings the West into the war in a way that Vladimir Putin will seize on?
Well, Putin will say it does, but Putin will say any direct influence from the United States, from the West into Ukraine is a direct escalation. Obviously, that is a risk. And just last week, we heard from Putin yet again. You know, he did signal that there wouldn't be more conscriptions, that of those 300,000 he already called up. That is something that would clearly agitate his society. We see a massive brain drain. We see individuals fleeing Russia. But at the same time, he also once again mentioned nuclear and the nuclear doctrine. This is something he continues to fall back on. But that does also show us a sign of weakness.
Last week, Jens Stoltenberg, the NATO Secretary General, said that the risk of a full-blown war is rising and it cannot be ruled out. It is a real possibility, is what he said. How is Europe preparing for this, in addition to increasing some of the budgets toward military, but also preparing for some sort of strategy should this escalation bleed a little bit closer to that possibility?
Yeah, and I think that escalation was really forefront when President Biden was in Bali at the G20, and he quickly had a quick meeting arranged the morning of when that missile landed on the Polish side of the Ukrainian-Polish border. This became a really real scenario for a lot of individuals about how the war could spread outside Ukraine's borders. What you are seeing in Europe is that a collective 15 or so countries, including the United Kingdom, joining up and talking about a more sophisticated alliance about air defense amongst each other. So like a mini NATO.
Emery, what is the shoulda, woulda here? I mean, are there a lot of people within the political transatlantic zeitgeist saying we should have done all this 8 months ago or 7 months ago? Is that a dominant theme?
Not really. I think that, for the Patriot missile should have done 8 months ago or so.
Just the buildup, and in general, the buildup, not just the Patriot, but in general.
Yeah, I mean, well, there's two things here. Before the war, there was criticism that the United States should have potentially done more in terms of sanctions against Russia to deter it when 100,000 troops were waiting on the lines. And we obviously seen what Putin has done in the past. Not just Crimea, but other countries surrounding Russia and former Soviet Union countries. So they thought maybe that was when you go after central bank reserves. That is when you start cutting off banks from SWIFT. That is when they should have potentially hammered down on the lifeblood of the Russian economy, which is how Putin continues to fund this war, which is the selling and exporting of Russian oil and gas and commodities. And then, of course, there's others who say once the war started, should have given Ukrainians everything they have. But of course, there's also a huge risk to that, right? This administration does not want to start a World War III, right? They want to make sure this is contained. So when there's pushback, you also have to look at the other side of those risks and why certain decisions were
Anne-Marie,
made.
just quickly, if I can jump in, just one final word on Vladimir Putin's response to the oil cap. Have we had an official response yet? I saw some reports around that in the last couple of days. What have we got now?
Well, we're waiting for this decree that Russia wants to come out with, but they maintain that they will not sell to anyone that signs up for the cap. The issue is this becomes one of these interesting fudge because the cap is set at $60 a barrel. And Urals right now, which are the Russian crude products, not ESPO, the Eastern Siberian pipeline oil that goes through a pipeline, the ones that go on the ships that need European shipping and insurance backing, Urals are going for about $50 a barrel. So maybe you could be India and say, well, I'm not technically signed up for the cap, but you're not selling to me above that cap anyway.
AMH down in DC.
Let's see.
Did you understand what she said?
I think wonderfully explained.
It's just
I'll go back over it and listen to it 10 more times.
I've read through the caps like 3 times and I'm 0 for 3.
You're not alone. Can we get the outlook for next year? Bank of America put out a great note recently. It was like top 10 calls for 2023, so here's one of them. Here's the quote. Russian sanctions, low oil inventories, China reopening, and an OPEC that's willing to cut production in case demand weakens keeps energy prices high. Here's their call for next year, for 23, on Brent. Should average $100 a barrel over the course of 2023 and spike in the second half of the year at 110. What do you make of that? That's punchy.
I think that they and many others are moving consensus out on the x-axis, which is a tried and true heritage of strategy. They're just moving out to where they were. And the key thing of all that mix you mentioned, John, is China demand. It's where I am.
The key word in that quote, Lisa, was average. Should average $100 a barrel. That's $20 north of where we are at the moment.
Can we get up to 120? Can we get north of that? What does that do after people have gotten used to gasoline prices in America that are the lowest going back to October, $3.21 on average through the nation?
Where's the SPR in that world?
Exactly.
Futures right now on the S&P, positive 0.1%. Yields unchanged, 350 on a 10-year. Coming up, Alan Ruskin at Deutsche Bank on this Fed decision later this afternoon.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Ramo, you wouldn't believe it. So rude in the commercial breaks. Tom can confirm that.
Are you consulting right now? Is that what's going on?
I'm trying to consult.
Yeah, carry on.
Futures right now on the S&P.
Paid by the syllable.
Up a tenth of 1%. On the Nasdaq 100, up a tenth of 1%. Also in the equity market, clipping higher, punching higher over the last couple of days or so, going into this Fed decision. In the bond market, 2s, 10s, and 30s look a little something like this. You know the highs of the year intraday at the front end, 480, there and thereabouts. 2 days after the last Fed decision. Right now, 420 going into the December decision, 350 on a 10-year, high of the year, about 430. So we've had about an 80 basis point move on a 10-year lower from the highs of the year. And this dollar, I've got to say this dollar is a whole lot weaker. Dollar index between the two meetings has gone from 111 at the start of November and Tom all the way back down to about 104.
It's a 7%
right now, euro
move.
dollar, 106.45. It's a real move.
Yeah, I'll blend it in. It's a big 7% move. And, you know, I think the conversations we've had this week, folks, on dollar have been very nuanced. There's a wide set of opinions on this.
Lisa, DXY, 103.88.
Yeah, and perhaps alleviating some of the inflationary pressure overseas. I wonder how that bleeds back to the U.S., but really shifts into this debate about next year and whether it will be the same. I'm looking at a bunch of names, including Delta. We were talking about that earlier, coming out with earnings per share that is just absolutely blew out of the water in terms of particulars. Some of the expectations increasing their expectation for revenue 15 to 20% next year. What recession, as we were talking about? United Air and JetBlue both rising in tandem, although Delta up 4.5% versus 1.4% for United and 1.3% for JetBlue. I also wanted to just touch on Tesla shares, because since September 19th, the shares are down almost 50%. Year to date, they are down more than 50%. This just starts talking about some of the Twitter risk that we've seen bleed into some of the shares. And we've been hearing about Twitter possibly not paying the bills for their headquarters in San Francisco or not paying severance. The Elon Musk reputational risk has been borne out in Tesla shares. And Dan Ives has been brilliant on this, a real long-time bull on Tesla, really pulling back. I just wanted to take a note of how much the deterioration in those shares has been felt in tandem with the plight of Twitter.
Lisa, hard to get a real read on this and hard to break it down into its individual components. But how much do you think is about leadership and how much of it is about what's happening in places like China?
It's a fair point, because you are seeing a decline in the production, in the demand that they were reporting. So there could be some also challenge from some of the other auto manufacturers. There is a feeling, though, this doesn't really help when it comes to reputational risk, especially if Elon Musk ends up pledging Tesla shares against some of their debts for Twitter.
I'm sure Tesla investors aren't too happy about that. The stock right now in the pre-market, as Lisa indicated, down about 0.25%. Hours away from the final Fed decision of the year. One of the best notes I've read in the last day or so came from Alan Ruskin at Deutsche Bank, who had this to say: while the futures market is currently pricing in a 4.43% December 23 Fed funds, the market will probably also take the Fed's higher end of 23 dot as a way of the Fed trying to signal that they do not expect to cut rates in 23. And here's the punchline, Tom. Something the market will continue to view with skepticism. Now, TK, does this raise a credibility question for this Fed, trying to reshape Fed fund expectations?
And that's where you are, the third rail for these people, along with that asymmetric risk we talked about, and with Dominic Kostum about supply side shifting to demand side, study and theory and all that is credibility. And every second of this press conference this afternoon, that is the backstory.
I couldn't agree more. Do we get a shift? Do we get a shift and do we get some dissent?
Right.
The dissent question for me is interesting, Tom. I wonder if we do get some dissent a little bit later.
I think you may be right. I think you may think clearer than I do because I'm Greenspanian here, which is, as Lawrence Meyer said years ago, you don't dissent. In America, you're put in the timeout chair mentally at the Fed.
I find that odd.
Yeah, you should, and the Bank of England does it so much better. I mean, there's no question.
It's the Board of Governors, to be clear, it's the Board of Governors that don't like to dissent. They like to go with the chairman, right? They like to all be on the same page.
I think it's an overall, I'll let Richard Clarida tell me that at 2 o'clock today, or Alan Ruskin right now, Chief International Strategist at Deutsche Bank and hugely esteemed in this. Alan Ruskin, a paper by the former Vice Chairman Alan Blinder years ago. How do central banks talk? How do they talk with this dot plot?
Well, I think they try to steer the market to where they think rates should be. And obviously, they've got a little bit of a problem right now because the market's very persistent in its thought process that the Fed's going to be cutting rates in 2023. I think the intriguing aspect of what you have right now is that, we thought the Fed would probably lose control or could lose control of the back end of the curve because back end yields were too high. And, QT would maybe push yields higher. And we've got exactly the reverse problem with yields, more consistent with a 3% funds rate than a 5% funds rate. So the market's not really listening to the Fed. It's not the worst problem the Fed could have, but I think the Fed is still trying to steer the curve higher in terms of yield.
Alan, do you see them being successful in doing so?
Not at this meeting necessarily. I think, the odds are that the 2023, end 2023 dot is between 4 3/4 and 5%. It looked like it would maybe be a bit higher than that before CPI, but I think that probably is a reasonable guesstimate of where that median dot will be. That's not far from where the Fed, where the market effectively believes the peak will be anyway. It's really the discrepancy, I think, is in the rate cuts that follow very soon after. The market thinks this is going to be more of a sort of traditional cycle. You get to the peak, you don't spend very much time there, and you start to see rate cuts. And the Fed's saying, no, wait a minute, this is a different cycle. And obviously, the more the back-end yields are low, the more you could actually see Fed funds plateau for quite some time.
Alan, I remember a note that you put out months ago when you looked at the previous few rate hiking cycles and calculated the average duration of staying at peak. We put out a similar story over the weekend. Last 5 cycles, I think the average was about 11 months. Alan, what is about the characteristics of this tightening cycle, the economic backdrop, that influences your thoughts about how long they will stay at peak?
Yeah, I think it's all about how much the economy slows and how much that slowing, particularly in the labor market, leads to a reduction in wage inflation that's consistent with a 2% inflation rate. I think the supply side is all coming together very nicely. We're actually getting a positive supply side shock developing. And it's really the demand side that needs restraint. And it's not obvious what's going to happen here because you can imagine a situation where if employment remains pretty resilient and inflation's starting to come down, that mix of employment's resilience driving nominal wages and inflation being lower means the real incomes will actually be growing again and demand could be quite resilient. So, there's a lot to play for here. The recession, which seemed like a complete gimme, a couple of months ago, is, certainly looking at worst like a very much sort of soft recession, as it were.
Well, that's where I wanted to go, Alan. Does yesterday's CPI print give you a greater sense that there could potentially be a soft landing? Does it make that a more plausible scenario to you?
I think it does at the margins. I think absolutely. I think you're seeing that the goods disinflation that we all have been anticipating is definitely feeding through. I mean, we do some nice calculations on the CPI, of course. We go X energy, X food, X shelter, lose half of CPI, and lo and behold, we don't have much inflation. We have disinflation. So maybe that's a bit of an exaggeration, but I think you're getting some constructive signals there that the supply side is, without question, helpful. I think you're going to see it right now. In fact, the import price data that's coming out at 8:30, look at that, and look at the ex-petroleum numbers. They've been down for the last 6 consecutive months. And that's there's a strong correlation with PPI finished goods. So I think that side is actually very constructive as far as the soft landing is concerned. As I said, I think you've got to be cautious on the wage inflation side. I think Powell laid this out in his last speech when he suggested that, with effectively excess demand to the tune of about 4 million workers. I think that is deeply problematic to get inflation down quickly. I think what you have right now is not that inflation's coming down, but ultimately, can we make that transition from, say, a 3.5% core inflation rate to a 2% inflation rate?
Just real quick here, Alan, we were speaking with Sarah House of Wells Fargo earlier, and she said all things being equal, a reopening of China would be inflationary. We are looking at a more rapid reopening than many people had expected. Do you see this boosting inflation in a way that's not currently being accounted for by current projections?
Yeah, I think, if the opening is successful, and that's a, big if, you could think in terms of revising up Chinese GDP numbers. Our forecast of about 4.5%. You could think, successful opening could raise that number up to 6%. Obviously, you've seen base metals, cyclicals, all very depressed, if anything, over the last 6 to 12 months. And you could see that commodities inflation start to pick up to a degree, but I'm not particularly worried that that's the big driver at this point in time. And again, if you look at the import prices that you see today, the inflation pressures from China are quite muted. The import prices from China are quite muted, running at roughly about 2%.
Alan, just to squeeze this in, just briefly, at the top of your note that you put out yesterday, you indicated that for the last year, the 2-year has sold off at every single Fed meeting. I wasn't aware of that, Alan. Do you believe today's going to be any different?
I think Powell's going to triangle in that direction. So, at least you got the Fed chair pushing in that direction. Is he going to be successful for more than 24 hours? Probably not. But I would say, on balance, the bias is in that direction, slightly higher 2-year yields.
Alan Ruskin at Deutsche Bank. Alan, great note. Again, fantastic. Appreciate the time this morning as well. TK, over the last year, the 2-year, selling off every single Fed meeting.
Yeah, well,
that's quite a stat, isn't it?
Yes, it is. But I'm frankly, I'm going to spend a lot of time watching France-Morocco during a press conference. I think you're already watching. To be honest, it's usually pretty. I think McKee, Steve Leisman, Gina Smilek, a few others asked some really pointed questions.
The promo.
Yeah.
The multimedia network.
Yeah.
Promo.
But I think
you're
there's
already
going to be some
distracted
piercing questions
by France-Morocco now.
Well, I am.
It's struggling to keep you on the rails.
Well, I am. I just got a wonderful note in from Tel Aviv. I want to keep it private. It's a guy who's a missile expert. And he said, let's not forget the Iron Dome of Israel. It really works. He goes into all the math of it and that. But thank you for listening in Tel Aviv today. Really appreciate it.
Well, thanks for reading that as we were interviewing Alan Ruskin and sharing some of the details.
I did. Well, Alan and I were going back and forth on missile trajectory as well.
Torsten Slog of Apollo, 8:30 Eastern Time.
He's a rocket scientist.
He's a rock star of this world. Looking forward to catching up with him.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. It could be a long legal battle to get Sam Bankman-Fried back to the U.S. to face fraud charges. Now, the disgraced co-founder of crypto exchange FTX told a judge in the Bahamas he plans to fight extradition. It was Bankman-Fried's first court appearance since his arrest Monday night. The judge denied his request to be released from custody on bail. The U.S. is set to fulfill a key demand from Ukraine. Once there's final approval from President Biden, the Pentagon will send Ukraine Patriot air and missile defense batteries. Ukraine says Patriots are needed to counter the relentless barrage of Russian missiles. On Capitol Hill, budget negotiators say they've reached the framework of a deal to avert a government shutdown. The compromise would fund the government this fiscal year. House and Senate leaders haven't released any details, but they say the agreement would let them pass a full-year spending package by December 23rd. Train strikes and freezing weather have left London's business districts deserted this week. According to FreeSpace, a workplace data tracking company, office occupancy in London plunged to 19% on Monday, down from 33% a week earlier. Thousands of financial professionals chose to work from home to avoid those disrupted commutes. And Apple is preparing to allow alternative app stores on its iPhones and iPads. It's part of a sweeping overhaul aimed at complying with strict European Union requirements coming in 2024. The laws are aimed at leveling the playing field for third-party developers. Software makers and regulators have complained that Apple and Google have too much power as gatekeepers. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
$8 billion, right, of customer money. So by definition, I don't trust a single piece of paper in this organization. I certainly think there has to be, more controls in this sector. Who should regulate it? I defer to this committee.
That was John J. Ray III, the FTX CEO. TK, this was the guy that oversaw the fallout of Enron. And look at how he's talking about FTX.
He probably has lunch with Terry Haynes.
It's unreal, TK, to hear this guy saying these things about this company after he went through the rubble.
Lisa never puts me in this position.
Of Enron.
The adults showed up yesterday.
Sure,
That's how I'd put it. I mean, and that's where we are. And I had a lunch 1,000,000 years ago in Enron when it was Houston Power and Light or whatever it was called. I can't remember. And I remember sitting in a lunch going, you got to be kidding me. Literally going, what do you mean? And of course, I could never predict a scandal like Madoff. I didn't predict.
Yeah.
Wasn't out front on that. Here, all I know is the adults showed up yesterday.
And some scathing words came with it, that's for sure. Yeah. Here's the latest from our side. Sam Bankman-Fried fighting extradition from the Bahamas after being charged with 8 criminal counts of fraud in the United States. Bankman-Fried defending his role at FTX on ABC and a media tour in the last couple of weeks.
I did not know that there is any improper use of customer funds. I wasn't spending any time or effort trying to manage risk on FTX. At the end of the day, it's not my call what happens, and the world will judge me as it will.
Tom, this one's going to go to the courts, and I think the SEC has a very different version of events to tell. based on the statement that we got in the last day.
You know, the SEC is where I want to go here. What we know is there will be a movie, there will be a reel of the cheerleaders of all this, and I am certain Shonali Basak will not be in that movie. She's Bloomberg's Wall Street correspondent and has had to actually try to report as an adult on this before the adults showed up yesterday. Shonali, again, thank you for your work yesterday as this story unfolded. The adults showed up yesterday. What does Mr. Gensler do now? Yeah, about Bankman-Fried in jail in Bahamas, but far more, what does Mr. Gensler do about Kraken, their challenges, Binance, their challenges, and the 8 other names you and Katie Greifeld know that I don't know?
One conversation I had yesterday after the hearing was with Representative French Hill, and what he had said was, listen, lawmakers and regulators should feel badly that Americans lost money at this scale and should have, from the beginning, crypto exchanges been treated more like any other exchange in the United States with some sense of regulatory oversight, some sense of disclosure with anything that is listed on those exchanges so that people knew what they were investing in.
I don't want to cut you off, but this is really important, Shonali. You're at the heart of the matter. The work of Arthur Levitt's SEC or Gary Gensler's SEC is audit. I see no evidence whatsoever of legitimate, not Big 8, but now Big 4 accounting firm audit at these firms.
There are some firms that do get audited by the Big 4, and that is an important point that you're making, but those firms are firms that are publicly traded and listed either in Canada or the United States. A lot of these exchanges are privately held companies, and by the way, when you listen to a lot of the testimony that will be made today in Congress, you'll hear a lot about this idea that the venture capitalists let these firms fly away with this behavior. If you are a venture capitalist in the United States and you are listing a firm publicly, there's a lockup period. And one of the professors that is testifying today says that that extra time that you're required to hold on to your securities rather than just buying tokens and selling them, it will allow you to have a greater alignment of interest here than you're seeing what's in the crypto community, both from big money and small.
We were speaking with Peter Scheer earlier, and he said he was a little surprised that there wasn't broader fallout as a result of what happened with FTX. He said, give it time. It didn't happen overnight. The Lehman moment wasn't a moment. How much behind closed doors or not necessarily on the record when you talk to big officials at these big financial institutions, are people starting to question their commitment to some of the crypto assets and the crypto networks that they've been, frankly, dabbling in and more?
How much more needs to happen, right? I mean, if you look at this, lawmakers conceded yesterday that the losses that will be sustained from FTX will be larger than what was sustained during Bernie Madoff. And so there was that, plus the horde of, at least a half a dozen firms looking to file for bankruptcy or raise money across the street. So there has been a lot of contagion. Remember, for FTX itself, we don't even know who its top 50 creditors are. So there are huge firms that are tied to this firm itself. So yeah, it will take time to play out. But the damage that has been done already has been very material. Now, what happens from crypto from there? Another thing that is weighing heavily on the heart of senators here is the idea of stablecoin regulation and seeing what to do about central bank digital currencies. Is there a greater digitization of money here that makes sense in the frame of the current regulatory system? These are questions that shouldn't be conflated amongst each other. There's a huge difference between buying tokens, or, as Jamie Dimon calls them, pet rocks, whether you believe in that or not, and the digital currencies that are tied to real money.
Shonali, before we let you go, the human story of this, why is Sam Bankman-Fried fighting extradition when the Bahama jail that he's in is pretty disgusting?
You should ask him, but this extradition process will take a long time. I think it will depend on where he thinks he will get better treatment. But remember, another big thing to keep an eye out for as we move forward from this. Remember what U.S. Attorney Damian Williams said just yesterday. they're not done. He's not alone. He clearly didn't act alone, and everybody from family members to his deputies over at FTX are now under the spotlight. And by the way, many of them have been seen here for many, many weeks and months in Washington. So lawmakers themselves are frustrated as investigators continue to look around and see who else was involved.
Sonali Basak down in DC. Sonali, I'll say it again, tremendous over the last couple of days, in fact, for the last month and more. Sonali Basak, thank you. TK, to Sonali's point there, this has been a dramatic unraveling in the last month or so, but it looks like we might just be scratching the surface.
Yes.
And there's a whole lot more still to come.
I'm in that camp, and I take the lead from the great Kenneth Rogoff with his incredibly courageous The Curse of Cash, my book of the year about 4 or 5 years ago. What this reminds me of, and talking to Sonali there, and particularly talking to Mr. Haynes earlier, John, is the Big Eight was the Big Five, which included Arthur Andersen, and they were blown up out of Enron. I don't know if that happens here because nobody's getting audited by Big Four or even Mazur as well with this, what some people allege is a pretend audit or a questionable audit of Binance.
The pet rock comment by Jamie Dimon is telling, because there are a lot of people who just don't believe in this, right? But then there are the people who do, right? When you talk about the web of people who are involved, Sam Bankman-Fried's parents were Stanford law professors. Some of the big investors were the biggest pension funds around the world. How do they deal with the reputational risk and their faith in something that was not regulated, that was overseas types of based companies? This is a harder nut to crack, just simply because there were the people who had faith and bought on that brute faith, rather than simply having some sort of thesis and auditing skills from historical precedent.
How much of that faith has actually been damaged in the last month, do you think?
Well, based on the price action, it doesn't look like that much. Based on how much people have at stake here, perhaps not that much. Peter Scheer talking about the potential whales in the market. It does seem, though, longer term, there has to be some consequences, and this is what Terry Haynes was talking about.
How does this dialogue change at a price? I'll let you decide if BitDog under 17 or 18 or where it was 14-ish. How does this discussion change at 11,000?
You know you're driving people nuts calling it BitDog, don't you?
He does it on purpose.
I know he does.
I'm just going to get the surveillance cork and put it in my mouth. That'll be better for all.
Do you think so?
Yeah. I think people know where I am on this. I mean, maybe I'm to the right of Nora Rubini on this.
Perhaps they're new to the program, Tom, and you should tell them.
I just, where's the audit process? What I don't get is why isn't Binance saying, okay, we're blowing up, let's go get audited? I gotta ask.
I don't think they want to say they're blowing up if they don't think they're blowing up, Tom. And I think even if they were, you really want to go around saying that you're blowing up.
Where is a measurement of liabilities in the balance sheet of these people that pretend? Come on the Bloomberg, it's a currency key, F11, yellow currency key.
Well, and this has actually been one of the main complaints against the likes of Tether, which is a stable coin that's supposedly benchmarked to the dollar. Where are the assets? Where are the demonstrations of what's backing that? And that's been a big question. And I'm not saying that it's, all fluff, et cetera. But again, to your point, Tom, why not more transparency at a time of some real questions?
Federated in the reserve fund, which literally invented the money market fund, to give him great credit out of Pittsburgh. Come on, John, there was there was points where there was real tension about break the buck. There's now, but there's no transparency, as Sonali mentioned.
Bitcoin, 17,000.
It's launched last couple of days. Nice.
Equity futures right now on the S&P down a little more than 0.1%. We're counting you down to a Fed decision in America. And a big game a little bit later this afternoon in New York. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. It if you can give a new life to a building. It also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Powell's been very clear that one good CPI report, one good anything report isn't going to change his mind.
Getting down to 2%, I think, is pretty difficult. I don't think you get there quickly.
We will come out of this, but I think the trajectory of how we come out of this depends on the Fed's resolve.
If there is a path to a soft landing, going down to 25 basis points in February helps to optimize that.
The Federal Reserve pausing, as we suspect it would be after their final increase in March.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. It is a Fed day. We will be with you at 2 p.m. along with Francis Morocco. We'll have team coverage of both major events this afternoon. But right now, focused on what we were talking to Shonali Besic on, the continuing story here. John, can we just talk some Fed here in this hour?
I would love to,
and
please.
Get Fed pure here. You know, I would say he's moving post-pandemic out to where he is, and it is a success. But there is a massive now what after that inflation
well, there is
report.
A three-part story here. First of all, you have to downshift from 75 to 50 to maybe to 25, and then you pause, and then maybe cuts come down the road. They do not want to talk about the third part of this story. I don't even think they want to talk about the pause just yet, but maybe that starts in the news conference later. For me, it is about the press conference. It's not about the language in the statement. The projections will be important, but how he characterizes the balance of risk around inflation, is it still skewed to the upside? Around policy, do they still believe the risk of doing too little outweighs the risk of doing too much? I think that final point has been really important in the last couple of months, and I'm very interested to see how he explains that in the news conference later.
And the other word he didn't mention this last time, and maybe he's doing this cagey, Now is where he starts talking about Brainerd's cumulative. We did not hear that in the last press conference.
So the language in the statement that people are also interested in, Tom, is the ongoing rate hikes, the ongoing hikes. Do they signal there are still more hikes to come? And I think the question for this market is, did the market respond to any of this? If it starts to push back against rate cuts in our future, does the market listen to any of that? Lisa, for me, are we more focused on the next 100 basis points of hiking, or are we more focused on the rate cuts that we're pricing after all of that?
And there's a big point underlying this, which is Fed credibility. Is this the Fed meeting where we see their credibility really go out the window in the sense that they're trying to message something and everyone knows that they're playing some sort of game theory and they just go in whatever direction they think they're going to ultimately end up? Exactly, because right now the Fed has said vociferously, we are not going to cut rates next year. We're going to hold rates high. And Tom, what you look at Fed funds futures, they are pricing in a peak of 4.8% in terms of Fed funds back in May. And then 2 months later, 3 months later, already the cuts take
And then
hold.
Alan Ruskin earlier puts a base of 3.38% because of that statistic you have right now. And I'm going to go to what he's not going to talk about today, but where the market's already doing the parlor game. John, this idea from Sarah House of Wells Fargo on the last mile. He's focused on the next mile.
Well, that comes down to the length of the pause. If it takes a long time to get down from, say, 7 to 5, 5 to 3, 3 to 2, then that speaks to a Fed that keeps it at a terminal rate for a whole lot longer. It's a conversation that we're basically having at the moment. Over the last few cycles, average duration at peak has been about 11 months.
This is critical because I know Alarian's listening right now. Maybe Jim Bullard, good morning out in St. Louis. The idea that they come up and they pause, and that duration of pause includes not going to, but it implies the peakedness that Alarian, Dudley, and Bullard are talking about.
Right now, there's a lot of skepticism about that. There's a lot of pushback. And not just in the numbers on the street. I think, to Lisa's point, people see a difference between what the Fed thinks they'll do and what the Fed is trying to signal. The Fed's trying to signal perhaps 5% rates next year because the Fed wants to keep financial conditions tight now. But I think a lot of people in this market struggle to believe they'll be able to keep it there through next year.
And to your point, Tom, are they going to keep them there as they get to the last mile if you do see unemployment going up and if you do see that softening? Right now, some people estimate we've only seen about 1/3 of the cumulative effect of Fed tightening play out in the economy.
You know, Sarah House modeling that as 3% to 2%. I would have a higher framework than that. Let's start our World Cup coverage. We do that with Lisa Abramowitz, who's really come on here with a knowledge here. Brief me and John, Lisa, here about the ability of Morocco to shut down those lanes the French come storming down, particularly on the left side.
Morocco has not allowed one goal to get through. Their defense has been incredible. I will tell you that it's sort of a shocking. So how much can they continue the defense and then really get, especially considering the fact that they're the first African nation to come out? Honestly, I think this is fascinating.
So big matchup last time around.
We've come so far.
Big matchup last time around.
It's been a journey.
Since we're being serious about this, big matchup over the weekend was Kyle Walker versus Mbappe.
Yeah.
Kyle Walker on the right side of the English
and
defense.
He did really well.
Did fantastic. So the big match-off this time is Hakimi versus Mbappe, and they're actually teammates at Paris Saint-Germain. So it's going to be very interesting to see how that plays out.
Does Loris and Harry Kane's relationship with the Tots
I don't think so. I saw one story that Hugo Lloris had texted Harry Kane and sent him his best wishes.
I don't even know how to pronounce his name.
It was
Lisa does.
The goalkeeper of your Tottenham
I love that. I love that they're all friends and that they give each other hugs on the field as they pass by. I think that's really nice.
I think they're all mates.
Yeah, I was going to say.
Not Ronaldo.
Yeah.
Argentina and the Netherlands got a little bit tasty, didn't it?
My data check here to get back on board of our Fed hour negative 0.55% Bloomberg Financial Conditions Index. John, let me just cut to the chase. That's an accommodative number Chairman Powell doesn't want to see.
Quote of the morning: Lisa pretending to like football is like her trying to be a market bull. Just nobody is buying it.
All right, who is that? First of all, I actually am genuine. Who said that? I would like to respond.
I can't disclose that name.
Oh, he made it up.
It is a Bloomberg subscribe.
Oh, yeah.
All right. TK.
I don't know. I'm looking at. Did we do the data check yet?
We've done it. You got to it.
I did the data check. I did one number, John. Help me out here. Give me some love.
Futures down a 10th. Yields unchanged.
That's it? Okay,
Euro
in our
dollar
Fed
up
hour,
2
that's
cents.
it. Right now, we're going to go death cross. Liz Young joins us, head of investment strategy at SoFi. In our Fed hour, it is about the time continuum, which is moving averages. And Liz Young has written about something I can't stand, which is the gloomy death cross. Liz Young, what is the death cross and what does it matter for Chairman Powell?
Well, I don't know that it matters so much for Chairman Powell, but it matters for investors, and it's been something that's signaled earlier this year. What happens is when the 50-day moving average goes below the 200-day moving average, that's the death cross. And at that point, it's widely believed that the 200-day moving average becomes our top point, our resistance level. And if you watch what the S&P 500 has done this year, we have not been able to break above those resistance levels. You can draw those in a couple different ways, but the point is that they have held strong, and they held strong again yesterday. We got right up to about 4,100 and gave a lot of it back. So the market just has not gotten out of that range.
So what does that mean? How does that push back against the ebullience that we have felt about disinflation and the Fed moving away from some of the more hawkish proclamations?
Well, I think that there is a desire by a lot of investors to, number one, just be done with all this negativity and find some durable upside in the market. But when we sit here with 3 different yield curve inversions that are very meaningful, and many of those are meaningful to the Fed, we've got the 2s, 10s inverted, the 3-month 10-year, and now what's called the near-term forward spread inverted. That keeps a lid on equity market. And when you look at just the upside opportunity, it's difficult to get past certain levels of valuation and really feel like we deserve to be at that PE. So when you get up where we are now, 17.5 to 17.8 times forward earnings, it's difficult to really say, okay, we're doing that based on strong earnings momentum or strong fundamentals in the economy. It's just not the case right now. There's still a lot of headwinds.
So, Liz, how do you talk then with investors in terms of how they should look at next year, how they should look at the Fed, how they should look at what may or may not be a recession if you take a look at some of the increasing pullback from recessionary types of scenarios? Even Alan Ruskin over at Deutsche Bank saying that yesterday's data pointed more toward a soft landing than he previously thought.
Look, yesterday's data was good. That was a positive report in the sense that we surprised to the downside. It signaled to the market that it's possible we avert catastrophe, but we're still not done with this. And here's what I want to hear from Jerome Powell today. I expect that they will do a 50 basis point hike. I'd like to hear how they decided to downshift, because it'll give us a signal of exactly what indicators they're watching to choose whether or not they need to slow down or pause. And that'll give us a little bit more certainty going into 2023. I'd also like to hear, sorry, just real quick. I'd also like to hear what his definition of restrictive is. Does 4.5 on the upper bound get us to restrictive?
Yeah, interesting. Is the stock market one of his indicators, as it was for Chairman Greenspan?
I think it's one of the indicators for financial conditions, but what we've heard from them, and I don't expect this to change today or anytime soon, is that they are laser focused on inflation and the labor market. So I think the more likely narrative shift will be that we stop hearing so much about inflation and we start hearing about the tight labor market much more.
Interesting. Liz, brilliant, as always. Liz Young there of SoFi. Liz, thank you.
Liz, thank you.
Looking ahead to the Fed a little bit later, will attention shift also from inflation to growth? And on that point, Delta in the pre-market, just to get you up to speed, Delta Airlines up by more than 4% now in early trading, going into the opening bell after a little bit earlier in the last hour or so. Lisa, raising the outlook for profit into year-end and through next year as well.
It's recession. I mean, this is the pushback,
Not in those
right?
numbers, eh?
Exactly. If you're looking at 15 to 20% increase in profits, that's after all of the expenses. They're able to jack up prices. Tom knows this intimately, and so they're doing so, and people are still buying.
Yeah,
when do they stop
United
buying?
yesterday, Lufthansa yesterday, and frankly, it's other industries as well. I mean, I kick off the jobs coverage with Jim Glassman at J.P. Morgan, and he's just, Johnny says the gloom out there is not anecdotally tangible among business.
What did Max Kettner of HSBC
Look
say
at that.
yesterday?
That's even more important, frankly.
He basically thinks there's upside risk to growth relative to the reset in expectations going into 23. I've talked about it a million times. Neil Dutta sat there last week of Renaissance Macro, said precisely the same thing.
To market players, I'm not going to mince words. I hate the death cross with a passion. George Kleinman's acclaimed 3-study moving averages on a weekly chart, John, SPX, which is better math than the Dow, gave a buy signal November 30, and it is well contained and within that trend right now.
There we go.
That's how adults speak.
You love your technicals, don't you? You hide that
weaned
sometimes.
on it.
Why'd you bury that? Why don't we hear more of that from you?
Because we don't want technical analysis. You know, we get that from Chris Verone. Do you want to hear from me or do you want to hear from Chris Verone?
I want to hear from Bipan Rai a little bit later, head of FX strategy for North America at CIBC Capital Markets. Equities right now, down 0.2% on the S&P. Yields trying to climb higher to 351 on a US 10-year. Your Fed decision coming up a little bit later this afternoon.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. FTX co-founder Sam Bankman-Fried plans to fight being sent to the U.S. He told a judge in the Bahamas Tuesday that he will not waive his right to an extradition hearing. It was his first court appearance since being arrested after U.S. prosecutors filed criminal charges. The judge refused Bankman-Fried's request for bail, calling him a flight risk. The Federal Reserve is set to moderate its aggressive tightening today. At the same time, the central bank is likely to signal that interest rates will ultimately go higher than previously forecast. Policymakers are widely expected to raise interest rates by 50 basis points. The announcement due out at 2 p.m. New York time. In the UK, there's a possibility that the worst of the cost of living squeeze is over. Inflation dipped from a 41-year high in November. Consumer prices rose 10.7% from a year earlier, down more than 11% in October. British households are desperate for relief after a big jump in energy and food bills. The Biden administration is about to deepen tensions between the world's two economic superpowers. It will put China's leading maker of memory chips and more than 30 other Chinese companies on a trade blacklist. And that would prevent them from buying certain American technology. Elon Musk reportedly is taking drastic steps to cut costs at Twitter. According to the New York Times, Twitter has not paid rent for its San Francisco headquarters or any of its global offices for weeks. It's also considering not paying severance packages and has refused to pay an almost $200,000 bill for the charter flights the week of Musk's takeover. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
The secret success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. You know, how do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
Special surveillance will cover the Fed's last rate decision of the year.
We're still seeing a strong economy, so the Fed has to do more.
What's important to me is to see if Powell can keep the ball contained in the goal and not put it over the crossbar.
Keep it tuned to Bloomberg for live coverage of the rate decision and the following press conference.
The average hold at a peak rate was 11 months.
Does this Federal Reserve have the commitment to keep going?
Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
Inflation is coming down in America. Prices are still too high. We have a lot more work to do, but things are getting better, headed in the right direction. I hope by the end of next year, we're much closer. Right can't make that prediction. I'm convinced they're not going to go up.
The President of the United States, following what I think is our best Fed promo so far. Tom Keene comparing Chairman Powell to Harry Kane and his penalty miss over the weekend, and we've turned that into a promo.
That invite I'm going to get for the Eccles building is great. For those of you, I think you missed this on radio. I'm not sure about the switching between radio and TV. We welcome all of you coast to coast on radio. This morning, there was, and I was suggesting the goals not to put the ball over the crossbar, as we saw with Mr. Kane of the Tots.
Did you make them make that?
No,
so that you could
I had
keep
nothing
taking
to do with
digs?
it. My people may have, but I didn't.
What does that mean in terms of Fed policy? I kept thinking, does this mean 50 basis points and stop?
Can you make sense of it for us?
McKee will translate that for you.
Can't wait for that.
That's called a punt.
Mike McKee coming up a little bit later. Joining us now is Bipan Rai, the head of FX strategy for North America at CIBC Capital Markets. Bipan, just to go first of you on the weakness we've seen in the US dollar more recently, since the last Fed meeting, is that something that you think the Fed can push back against, or do you think the Fed should push back against?
No, not really. I think the Fed's primary concern right now is the inflation rate, and given the fact that there isn't really too much of a conflict between its dual mandate, the labor markets are still too tight, prices are still too high for consumers, so that means that the Fed's got to keep policy tight, and I don't think that there's going to be much today that really breathes more life into the stronger dollar view, at least in the near term.
But I love your note, how you say, can we just move on from this afternoon? What do we move on to in our analysis?
Yeah, I mean, there's a couple of things happening outside of the United States that I think are particularly interesting, and there's going to be a major theme that's going to erupt in the United States next year that we need to pay attention to. Outside the United States, let's pay attention to what's happening in terms of the cyclicals from a macro perspective, in terms of China potentially opening up. What does that mean in terms of domestic demand? That is probably the more important theme for the dollar into 2023. Also, we've got a lot more, drama when it comes to decision making at the Bank of England and potentially the ECB that I think are going to be more interesting next year when it comes to the dollar. Yeah.
How do you express that in a pair? What's a chosen pair if you see the tensions of Frankfurt and London?
Well, Frankfurt, London, the tensions there, I mean, it's the obvious potential there is going to be via euro sterling. But if we're talking about disparity with the Federal Reserve, I mean, I think the much more cleaner play is to really continue chasing the euro higher from here. I think we did see enough of a short position build up. There still could be further room to the top side, not least as the ECB is pairing its balance sheet via the TLTRO loan repayments, and this is without even entertaining QT, which I think is going to be a more important theme as we get into March and April. So again, further upside for the euro here, I think makes sense in the near term. For the sterling, I'm less convinced. I do think that there are some structural concerns that we need to monitor before we actually leg into sterling longs.
Bipan, I want to dig into something you were talking about, the China reopening, and I'm glad that you mentioned it because it is sort of surprising how quickly they are reopening despite the surge in virus cases and the surge in hospitalizations. How much is that not being priced in like you think it should in certain FX markets?
Mm-hmm. Yeah, I mean, that is a very prominent concern that we're looking at in the here and now. That's why into 2023, we think the dollar CNH is going to remain more or less range bound. As we move past this winter, and of course the rising cases from the reopening of the economy, that theme should dissipate into the backdrop, and really we should return to the cyclicals, which in our view will become far more constructive for China into the middle of next year.
How does that affect Europe? Because one of the reasons why we have seen euro strength perhaps is because people see disinflation in the U.S., but also because of energy storepiles and this idea that Europe is going to get through this winter just fine. If China reopens and that really crimps some of the global demand, or it increases demand and potentially pressures supplies, particularly of natural gas, what does that do to the euro?
Mm-hmm. Yeah. So once we get to this more fair equilibrium level for euro dollar in the near term, which we think is probably closer to 107, 108, I mean, at that point, we have to look at more two-sided risk to the euro. And one of the reasons why is potentially the competition from China when it comes to scarce commodities like natural gas. So that is something that we're going to be a little bit more concerned about into the middle of next year. But that still doesn't say much for our for the constructive views out there for the dollar. We think that there's going to be more endogenous themes, such as the U.S. debt ceiling being triggered and what that means for the drawdown of the Treasury General account, and also the shifting liabilities at the Federal Reserve, which we think are going to be bearish for the dollar.
The trend of inflation here linked to the dollar dynamics, and we talked to Wells Fargo earlier this morning about the last mile, which they framed as 3 to 2% down. At what percentage point in your head on headline inflation do we really get to see a change in currency dynamics? Is that something near and soon, a clear and present reality, or is it later on, farther down that continuum?
Well, I mean, it's going to shift. I think, and this is going to be a bit of a cop-out answer, Tom, but we're seeing it already right now with respect to headline inflation moving to 7.1%. And, then that markets did anticipate that move lower in headline CPI over the last month. We did get that drawdown in the U.S. dollar. At some point then, it really depends on the stock of surprises relative to street expectations. But if we shift towards, say, 3 to 4% on headline CPI, I think the Fed has done its job at that point. And then all of a sudden we have to look at other drivers for the dollar on a more structural basis. And that, when we get to that space, we'll have to reassess our dollar view.
Bipin Rai, thank you, sir, of CIBC Capital Markets. Looking ahead to what's coming up next, we're going to catch up with Torsten Slok, the Chief Economist at Apollo Management, in just a moment. In the next hour, here's a lineup for you, Tom, on Fed Decision Day. Bob Michael of JP Morgan Asset Management, alongside Krishna Mamani of Lafayette College. We'll be catching up with Mike Gapin of Bank of America and Kathy Jones of Charles Schwab, all coming up in the next hour.
Really smart. I'm really interested what Krishna Mamani, with his endowment responsibilities, thinks about the return of 60-40. To me, that would be really linked into this Fed discussion.
Yeah, and next year, whether bonds truly are back, or whether JP Morgan Asset Management
call. Everybody's on board
Bob
that.
has a different view, particularly on credit. Bob has a different view on credit.
Yeah.
I keep hearing this story, you've heard it a million times, Lisa, that the index is higher quality this time around. You won't get that gap out in spreads. Bob's basically been saying, you wait and see.
The big refinancing cycle comes in 2024 and 2025. If rates stay high for longer, if there is resilience in the economy, that starts to really pressure some of that story. We can start getting ahead of that refinancing cycle. So, there's some technical issues that just aren't making total sense. The market's basically saying we're going back to the past in terms of dropping rates quickly and getting back to inflation that's low.
We talked about the resiliency of the U.S. economy in the face of 400 basis points of tightening. I have to say we've got to talk about the resiliency of this market as well, Tom. The fact we might end the year with the S&P down something close to 15%. The fact we might end the year, where are spreads now, Lisa? 450?
The lowest since June. If
Something
you take
like
a look at if you take a look at high yield debt, it doesn't make a lot of sense to me. I've got to be completely frank. If you think that we're heading into a slowdown, but then again, you have to wonder. Max Kettner saying perhaps we don't get it, and then if you think about that, 4.26 percentage points. Yeah, that's spreads right now.
Doesn't scream recession, that, Tom. Got to say.
No, it doesn't. And I'm glad you continue to bring this up, folks. We keep track of our strategists. Some get it right, some don't. Mr. Kettner was incredibly gloomy X number of weeks ago in London.
So he's positive on the economy, Tom. Got to be careful here. He's positive on the economy. He's not constructive on equities.
Yeah.
So it's kind of like the reverse world to everybody else. Everybody else is saying weak economy. That means you buy it because the Fed has to back away. He's saying strong economy.
Well, that's a debate.
The Fed has to stick with it, and ultimately the equity market is going to struggle.
Neil Dutta agrees with him. That was what Neil was talking about as well, that we will not get necessarily a recession in the first or second quarters. And then that means the Fed can go further, and that's going to be more negative for the economy, for markets, longer term.
Looking forward to the coverage a little bit later, guys. Got my screens ready.
Screens.
I think
Which
so.
ones?
That one in the back, that 60-inch plasma. You know what's going on there.
Yes.
It's not the equity market.
I think the halfbacks of France are key. They've got
Everyone's really excited.
Morocco.
You're excited for the halfback to pass to the halfback and
No,
back
I'm
to the
excited
halfback.
if they kick the damn ball from
That's
farther
the Simpsons line.
No,
all
like
of this
the
is a
first
joke
goal
to him.
the other day with
All of
France.
this is a joke to him. It's the Simpsons commentary. It's ridiculous.
Goal.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
It is a different Fed day. It is Bloomberg Surveillance, and yes, we'll be here this afternoon at 2 p.m., but we have been distracted in the last 48 hours by other issues, and particularly all of this issue about cryptocurrency and exchanges. Lisa Bramwitz and Tom Keene, Mr. Farrow's in preparation for his 9 o'clock opera that he will do later. I think we need to do an update
Opera?
right now.
Did you just say opera?
Yes.
So he is going to be mandated to sing.
Yeah, well, it's happened before, usually with a beverage in his hand at watching a football game. Absolutely. Lisa, we got to bring an update here on crypto, what we've learned today, and this is very important, folks, and it sort of goes to Mr. Musk as well. Twitter Spaces is how you communicate now if you're in modest crisis. Binance, in the last couple hours, folks, has used Twitter Space or Spaces to communicate.
Yeah, how do you address
I'm fascinated by that.
A broad base of investors that range from institutions to individuals? The fallout is unclear. Peter Scheer was saying the Lehman moment was not a moment. It was a cascade of events that transpired over time. It will take time to understand the full fallout here.
The Twitter Space, I think it's new. This is something original that happened this morning.
Before?
No, I have no clue what it is, but there it was. And so that's where we are. Right now, they're not going to use Twitter Spaces this afternoon for the press conference. We will await for sharp questioning, always from Michael McKee, head of our Economics and Policy International. Mr. McKee, I don't want you to give away what the question is today, but what's the greatest mystery we need to ask of Mr. Powell?
Oh, probably whether he's favoring Morocco or France today, and why they chose to schedule a Fed meeting on the day of a World Cup semifinal.
Oh,
That's key for a lot of people I know in the surveillance
Got that
world.
right.
But for those few people who are in the financial markets, they kind of want to know at this point where we are and where we're going, in the sense that we know that they're going to do 50 basis points today, and we know they're going to warn they're continuing to raise rates and they'll hold them at a high level. But what does that exactly mean? Does that mean 25 basis points at the next meeting, 25 more? Is there a chance that they cut rates in 2023 if we see inflation continue to fall in the same way that it has? Or do they want to warn people, we're not going to do anything until the end of 2023 to keep financial markets from loosening even more? So those are kind of, I think, the front and center questions for the chairman today.
Mike, how concerned are Fed officials from your vantage point about the fact that we have gotten looser financial conditions over the past few weeks?
I think that the looser they get, the more concerned they will be. They know that the combination of good news in terms of inflation, which is what they're looking for, and the fact that the Fed's getting close to the end here are going to create these conditions. The question is, how far do the conditions go, and can the Fed, particularly Jay Powell, put a floor under that by verbally jawboning Wall Street and suggesting, don't get carried away?
Michael, one final question, and maybe it's with the inflation shift that we saw yesterday and the drama of good markets. Can you define cumulative? I would predict he may actually talk about that more today, now that it's going in his direction. When they say cumulative, as Vice Chairman Brainerd has, what exactly does that mean?
Well, it means that they have been getting ever tighter, and so rates are rising ever more across the economy. But as we know, long and variable lags, yada, yada, yada. And so that's going to hit the economy at some point in 2023. And it's going to be an accumulation of all these interest rate increases over time. So how does that play out in terms of discouraging additional borrowing? That's what the Fed is going to try to guesstimate. They don't really know. But then you throw in on top of that the fact that our neighbors to the north and the BOE and the ECB are all raising rates as well, and liquidity is a global thing. So there is a cumulative impact on the overall economy that's hard to measure, but they know it's there.
Okay, Michael McKee, thank you so much. And of course, he will join us at the 2 o'clock hour along with Richard Clarida, the former vice chairman of the Fed. We are honored to bring in Torsten Slok, for years at Deutsche Bank and now chief economist at Apollo Management, to brief this morning. As we said, define cumulative. Let's define faster. That's a lead note. David Malpass, now at the World Bank when he was at Bear Stearns, loved to use that word as a calculus substitution. What does faster mean as we look at the inflation continuum right now?
So, of course, what's very important is, as you just talked about, that interest rates have already gone up, and the cumulative effects are beginning to show, most importantly in interest rate sensitive components of GDP. We're seeing a slowdown in housing, we're seeing a slowdown in autos, and because those are the sectors that require financing. So at the moment, the goods part of the economy, housing, autos, durable goods, washers, dryers, is slowing down. It's the service sector that the Fed would like to see slow down at this point.
You said that it's too soon to call the all clear, that we're actually on some sort of disinflationary trend, but you also have been talking about how there is this strong year-over-year comparison effect that is taking effect and that is going to drive inflation lower. So how should investors look at this? Are we heading into the same era that we left, or is this a new, more inflationary environment that we're seeing led by services?
Well, that's a very, very important question, Lisa, because there is a very important debate in Fed working papers and in the academic circles also about how much demand destruction is needed to get inflation back to 2%. A lot of people highlight and say, they're worried about inflation might be sticking at, say, 3, 4, 5%. But that is not anchored in any model or any framework other than the fear that more demand destruction is needed. And there's a very wide range of views that, for example, Danny Blanchflower is saying, well, we'll be back at 2% inflation in 6 months. Whereas the SEP, the Summer of Economic Projection from the Fed, is saying, no, this will be more like 3 years. So the question for markets is not whether inflation is falling. Everyone agrees that inflation is falling. But the question is, if you both know that the supply chains are getting straightened out and also the economy is slowing down, in particular the goods sector and the interest rate sensitive components, you could have the combination of inflation coming down potentially faster than what the consensus is saying here at the moment.
How do financial conditions tie into this trajectory? In other words, would tighter financial conditions lead to a faster rate of change or faster rate of inflation coming down and to a lower multiple?
Yeah, that's very critical. I mean, it's not clear to me that the Fed wants financial conditions to tighten everywhere. There's a very important nuance in this debate about interest rate sensitive components of GDP slowing. So we're definitely seeing housing, autos, durable goods slowing down. And that's, of course, helpful in both dragging inflation down and in slowing growth down. But the service sector is not quite slowing down yet. So tightening of financial conditions is already happening, in particular on the goods side. But on the service side, if you think about primary high yield markets are essentially shut down at the moment. Is that a desired goal for the Fed? Do they want that to spread to IG? I mean, there's a very important debate about, well, do they really want to slow down financial markets to the degree that is potentially required, and maybe they want to broaden this out and spread this out over a longer period?
When you're at Deutsche Bank, I could just see Dr. Hooper turning to you and saying, Torsten, would you make up a chart here about when the real wage flips? So part of the service sector idea here is we have massive negative real wages. what's the dynamic as we go through this process Chairman Powell wants us to go through? You mentioned IG as a risk spreading over from housing. Well, can they successfully manage a lousy inflation-adjusted wage back to some kind of positive wage?
Well, that's a real challenge because, as you know, about 4 million workers are missing from the workforce. The labor force participation rate is about 4 million below trend. And that means that the pressure on wages continues to be out there. And with wage inflation at 5%, it is absolutely the case that the labor market does need to deteriorate, meaning to soften a bit more. And that's also what Jay Powell himself has been asking for. But to your point, there is a very important question also about, can we have inflation coming back to 2% without the labor market softening substantially?
So you're talking about the people who are pitted on either sides of that exact debate of where exactly we're heading and where the natural rate of inflation will end up. Where do you stand?
So I do think that from all the Fed working papers that have looked at what drove inflation higher, 2/3 of the increase in inflation was probably because of supply shocks and supply chains that are now getting straightened out. We'll resolve that on its own time. We'll take care of that. But the 1/3 that's demand is going to be much more challenging. But the question is, with the cumulative rate increases that we've already seen, maybe this could be enough to actually slow the economy down. So therefore, if you look ECFC go on your Bloomberg screen, the consensus expects growth at basically 0 for the first 2 quarters of next year. And that does mean that maybe we already have in the pipeline that slowdown that's required to gradually lift the unemployment rate and therefore get to your question, Lisa, the soft landing that I think is the most likely scenario.
And other people are starting to agree with you more than they were perhaps 3 weeks ago. The Max Kettner view of the world, the Neil Dutta view of the world is for perhaps not a recession in the first half of next year, perhaps pushing it back to later in the year. This is not a positive outcome, though, for markets because it indicates the Fed will have to keep rates at a high level. Do you agree?
Well, no, I don't agree because I think, remember, if we do not have a deep recession, then earnings should actually still be okay. So if there's a soft landing, I still think markets could actually do okay. But we are going into the period, the inflection point is very clear. We're going from a period where the Fed was saying rates are going up, 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 to now the Fed is saying, well, we can see the peak is in sight, and now we might begin to see rates going sideways. That means that vol was very, very significant, very high when we were going up, and now vol is being compressed, and that should also give more clarity to equity investors and to credit investors, both for IG, high yield and loans. You should begin to see more clarity about, well, where is the peak in rates? We're getting closer to the point when we will have a better idea about where we're going in terms of the economic data. So the bottom line with that is that from having a long period of a risk of a harder landing, I think that the more we can get this sequencing of inflation coming down without the unemployment rate going up, the more we will be moving towards a soft landing scenario.
Most people talk, including me, you do. You play soccer all the time over in Brooklyn. This was a dump of a shipyard, which was a grassroots Brooklyn effort, and then Governor Pataki and a mayor, I can't remember his name, but then a mayor jump-started this going into a gorgeous soccer field as well. You are qualified here with Team Denmark and Brooklyn. Can Morocco actually get this done today? Or are they going to, be like Croatia, and then we've got France, Argentina?
They've clearly been the underdog. They've been very impressive. As Lisa was just mentioning, their defense is very, very good.
Well, she knows more than me.
So I think, well, France, of course, Denmark did lose to France. So
oh, you think that's funny over there?
I do. Okay. A lot of people are laughing at that one. Carry on.
But we'll see. We'll see how far they get. But I mean, France, of course, Mbappe is just outstanding.
France, Argentina, quick.
It's
Argentina, clearly.
Yeah, well. I'm going to go with France, but Argentina has some really good players, but I still think that France has the upper leg. I mean, they have some really good players. They've been playing an incredible tournament. But let's see. Both, of course, are very good. Argentina, of course, also has with Messi an incredible team, and they did incredibly well yesterday.
Oh, please, would you like to comment on that, Lisa?
Incredibly creative offense. I really enjoy his pass. It's great.
His energy and it has illusions, Mr. Farrow says to Diego Maradona. I think it really works out.
Yeah. That sounded really smart, Tom.
Thank
that was
you.
good. That was really fun. Any other references there?
No,
that's all you got.
I thought Maradona was really good. I mean, he really played well. Torsten Slok, thank you.
He sang well too.
Apollo. Unfortunately, we have to continue. Stay with us on radio and TV. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. It could be a long legal battle to get Sam Bankman-Fried back to the U.S. to face fraud charges. The disgraced co-founder of crypto exchange FTX told a judge in the Bahamas he plans to fight extradition. It was Bankman-Fried's first court appearance since his arrest Monday night. The judge denied his request to be released from custody on bail. The U.S. is set to fulfill a key demand from Ukraine. Once there's final approval from President Biden, the Pentagon will send Ukraine Patriot air and missile defense batteries. Ukraine says Patriots are needed to counter the relentless barrage of Russian missiles. President Biden will try to fix the perception that the U.S. has neglected Africa, while Russia and China make inroads. He'll host a summit today for African leaders. The president will meet with delegations from almost 50 African countries, as well as the African Union. BlackRock is changing its leadership ranks. The world's largest asset manager is promoting its former head of stewardship, Sandy Boss, to be chief operating officer of the global client business. Meanwhile, former head of human resources, Manish Mehta, will oversee a new unit. It's comprised of BlackRock's trading, lending, and other functions around the firm's relationship with Wall Street. And applications to buy homes in the U.S. resumed an upward trend last week. The Mortgage Bankers Association's purchase index climbed 4%, while borrowing costs stayed near an almost 3-month low. The average rate on a 30-year loan ticked up 1 basis point to 6.42%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
I'm so deeply troubled to learn how common it was for Bankman-Fried and FTX employees to steal from the cookie jar of customer funds to finance their lavish lifestyles.
It appears to be the same old-school fraud, just using new technology.
They spoke yesterday. It was interesting. From Los Angeles, the esteemed Congresswoman Maxine Waters and a gentleman of a different cut of cloth, Patrick Henry, who is rising rapidly in the Republican Party, is well. We spoke yesterday on these matters in Washington with a gentleman from the fields of Western Michigan, a Republican, Mr. Huizinga. We did speak about the World Cup and his Dutch ancestry and that. And now a different conversation. Emmanuel Cleaver, I could say, is someone who grew up in Texas, Prairie View A&M, and did politics and did his religion in his Kansas City. But far more, he did the toughest thing in American politics. He was the mayor of Kansas City for longer than a cup of coffee, for a good 10 years. And I will introduce you, sir, today with great respect, is the mayor of Kansas City. You are viscerally tied to people of cities and people, I'm going to say, financially challenged, struggling in America. What are they supposed to make about a fraud and scandal that we see from fancy people, fancy educated? How should America adapt to that?
Well, first of all, the Congress of the United States should act. Look, if we are able to see fraud, and if we fail to call it fraud, then we are a fraud. And I think right now we need to just let the word go forth that they need to be extremely prudent and informed as it relates to this new digital dollar enterprise that's going all around the country and impacting Hollywood and the NFL, NBA, and then people who struggle every day trying to make a living and think they can make some money on the side. Look, right now, this trillion-dollar enterprise is something that I don't think any person should advise an American to embrace.
Right.
And that's why I called it creepy dough.
Congressman, I'm going to go to the book of James, okay? And I'm going to quote from it. You've looted the earth and lived it up, from the book of James, something you know so well. People will say in this nation, Republican, Democrat, disaffected, it's about campaign financing, what Mr. Bankman-Fried did in supporting, obviously, his favorite Democrats or less favored Republicans. Is this another example of how we have to get our campaign financing, our money to politicians straightened out?
Yes, but the public is going to have to demand that elected officials vote for campaign finance reform. Right now, people are walking around here in Washington who understand how ugly it is, and there are some synonyms of ugly that probably should be used, but because it's far worse than the word ugly. And we know that it is a big mess and that people are being purchased. And I think we just saw Bankman-Fried brag about, in some ways, bragging about people he purchased on both sides of the aisle. We've got to turn this thing around.
Congressman, do you think that it's important that anyone who received a contribution from him return it? I mean, how much progress has been made on that front?
Well, I think there are some members who are trying to return the dollars, and there are some who are saying they didn't know that they had received dollars, which is very likely. I mean, during the campaign, you get a lot of money in, and you may not know who gave it all. But right now, everybody knows what's going on. And so that money should be returned, and it ought to be returned publicly. I think it will send a signal to others who think they can buy a seat in Congress that when you do wrong, Congress is going to step on your foot, and people are going to go to jail. And it's also now in time for us to seriously consider putting in place some kinds of regulations.
Were you concerned about the timing of the indictment, considering that Congress members were not aware of that and were expecting to hear Sam Bankman-Fried to arrive and testify to you?
Yes, I think most of us were, probably all of us were surprised. I'm told that there was some concern at the DOJ, at the Department of Justice, that Sam Bankman-Fried may have wanted to leave the Bahamas and go elsewhere where there were no extradition laws with the United States, or agreements rather. And so it may have been one of those situations where we better act now. I don't think any of us know. I think the Justice Department will eventually let the public know what was going on. But it was weird. The day before he was going to testify, but it shows you how horrible his judgment is if you just read the opening page and the second line in his statement to the United States Congress. It's unbelievable.
I will state, Congressman Cleaver, that you are a staunch Democrat. I believe your record shows that right now. There's immense focus on the dynamics of the Republican Party. After this election and the relative historic success of President Biden and your party, what should be the prescription for the Democrats to capture centrist voters in America?
Well, first of all, I think we have to acknowledge that that we are moving toward being a party of everyone. We have not been very good in rural America. We have not been very good in attracting evangelicals. And I think we can do both of those things, but we've got to be willing to call something a ball of nothing when we see it. And we also, if you flip that over, we also have to understand that people in rural areas are a lot more vocal about their religion. Democrats tend to want to run away. So we don't come across as people who can relate to them, to just people in small communities around the country.
Congressman, do you want to see President Biden run again in 2024?
Yes. I was one of the first individuals in Congress to endorse President Biden. And I'll tell you why. John Kerry and I were sliding up and down the roads in Iowa before the primaries were over. When we were trying to get ready for Iowa, and we would have crowds, whopping crowds of about 14 people. We had a really big crowd at one of the churches. 25 people showed up. But I stayed with the president because I believed, and I think the facts will prove now, that of all the individuals who wanted to run for the presidency with the Democratic label, Joe Biden was the only one who could have beaten Donald Trump. I think he would have plummeted anybody else except Joe Biden. I still believe he can win now.
Pastor Cleaver, thank you so much for joining us today. The gentleman from Kansas City, Emmanuel Cleaver, the congressman from Missouri as well. I do thoughts there, Lisa, but I just think we've got to drive forward to the news flow today. We have this hearing coming up, which we completely underplayed, but again, it's going to be more of what we saw today. I'm focused forward on Binance. I don't pretend to understand it, but I'm just trying to get, as you mentioned, the Bahama jails seem to be horrific.
Well, and
that's a story right now.
Well, Congressman Cleaver indicating that perhaps the reason why the Department of Justice moved as quickly as they did was because he potentially was going to move somewhere where they didn't have an extradition treaty with the United States, like Bahamas, the Bahamas does. Going forward, though, you raise a great point with respect to Binance. This is what Peter Scheer was alluding to. There may be more shoes to drop. Sonali Basak also talking about that. We shall see. At what point does the end of easy money really continue to pressure some of these areas that have grown up under a very accommodative Federal Reserve? And
in the last 2 hours, the leadership of Binance making clear they have a relative calm, or at least a lessening of the concerns of the last 48 hours is how I'd put it. Our day doesn't end. We have, I have to go to radio, but Lisa, there's a Fed meeting this afternoon.
And there's also a game that I think that you might be paying more attention to. That's what we're going to be looking at. Honestly, it's an important...
Slock looked at me like I was cross-eyed or something.
This is going to be an important Fed meeting after 2 consecutive softer than expected CPI prints. Does that shift the Fed view forward?
Diane Swank has Morocco. Good morning.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from New York City this morning. Good morning, good morning. The Fed decision just around the corner. Equity futures just a little bit softer. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Investors looking to put together a year-end rally with the bulls emboldened by a soft inflation print. It's Fed Chair Jay Powell coming up next.
The Fed meeting and decision.
We have the Fed announcement.
Jay Powell. What are we going to hear from Chair Powell? We are seeing core and headline inflation move lower.
Powell should definitely sort of speak to the encouraging news on inflation.
I expect him to go 50.
Obviously, they can step down to 50 basis points.
But I expect him to downplay future rate hikes.
Data of this nature allows them likely to do that.
The focus is still going to be near term, what the Fed is going to do in February.
They're trying to monitor how the economy is reacting to those hikes.
It will all depend on how long inflation is going to be staying elevated.
Sense of relief, but it's not over yet.
Joining us now to discuss is JP Morgan's Bob Michael, Krishna Mamani of Lafayette College alongside him. Bob, first to you. Does yesterday's inflation print change anything for the Fed today?
Boy, I would love to know how many of the FOMC members went back and changed their terminal dot, because they had a do-over, I believe, until last night to do it. I think on the margin, probably in the conversation, but the three things we're expecting is, one, a step down to 50 basis points, two, a terminal peak in the Fed funds rate somewhere around 5%, and for the chair to reiterate that it's too early to declare victory on inflation.
So, Bob, when it comes to the balance of risk, the assessment of the balance of risk from this Fed chair, do you think he still commits to this idea that the risk of doing too little outweighs the risk of doing too much?
No, I think it's far more balanced, and I think after today, we're heading into a series of Fed meetings where genuinely they will be data dependent. So they will look at the data. Every meeting is in play, whether they raise rates or not, and we haven't had that for about a year.
Krishna, your take?
Well, so I disagree slightly with Bob's assessment. I think the balance from the Fed's perspective hasn't really, it has definitely changed in certain areas, but the one area that they care about the most, which is the labor market, it really hasn't. So if you look at supply chain better, shelter likely to be better, energy better for sure, but labor, no change whatsoever. And I think the last employment release probably proved that point for them. So yes, things are looking better, but right now they can't relent. And that's the message we are going to get today.
So Krishna, let's talk about a terminal rate. Closer to 5, a 5 handle. What's the difference between what they signal in the dots and what you expect to materialize next year?
Well, so I think 5% is the right assessment. I think the strategy for them, because other things have kind of panned out the way they expected it to, trying to get terminal rate up to 6-7% at this juncture doesn't really make any sense. So their strategy, both from a effectiveness standpoint and from a risk management standpoint, has to be take the terminal rate, or take the rates up to the terminal rate of 5% and just wait, and hopefully the labor market cooperates. And if it doesn't, then we'll see what they do.
Will the market buy what they're selling today? This was Alan Ruskin at Deutsche Bank. This quote here: the 23 median dot will superficially be bearish relative to the December 23 Fed Fund futures, but not relative to market expectation for the dots themselves. If you don't understand that quote, here's this quote: the market will probably also take the Fed's higher end 23 dot as a way of the Fed trying to signal that they do not expect to cut rates in 23. That's something the market will continue to view with skepticism. Bob, I would love your thoughts on this. This battle between a market that's pricing in cuts and a Fed that's saying, no, 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 we're not doing that. How does this play out?
Well, I think it plays out with the Fed pausing sometime over the next couple meetings and leaving rates wherever that may be, somewhere between 4.5% and 5% through year end, just to ensure that they've gained some traction on inflation. And Krishna is right. The labor market is still very tight. Wages are going up. At some point in time, the price increases, the sticker shock from that, may just be normal, and wage gains will compensate for that. The other thing on the horizon is a reopening of China, and that should add to a lot of consumption. So it is too early for the Fed to declare victory on inflation.
So Bob, let's talk about rates. 2-year right now, 4.20. 2-year November 4th was pushing 4.80. That was 2 days after the Fed last met. Is 4.80 it, Bob? Can we get back up to those levels at the front end?
I would love to get back up there, but I don't think so. I think we've seen the peak in inflation. We've seen the peak in rates. I think the market told us at 4.80, the highest the Fed is going to get the Fed funds rate is 4 3/4. The market's going to be right yet again. Any kind of backup in yields you're supposed to buy.
Krishna, you heard it there from Bob. We've seen the peak in inflation. A lot of people agree. Have we seen a peak in rates?
I think we have seen the peak in rates. I think the likelihood that the 2-year gets back to the old level or through that, I think the likelihood of that in the current environment is pretty small. I think it is working out the way the Fed expected it to work out, actually. So I think that gives them enough comfort to not take terminal rate meaningfully higher. And if the terminal rate is not going to be meaningfully higher, 2-year and for that matter, even the 10-year and 30-year, can't really go too much higher than where they have been in the past, and probably don't touch those levels anytime soon either.
Krishna, are you more confident about the path for inflation or the path of growth next year?
So path of inflation, I think, this is a unique cycle. So I would have liked to have said that path of inflation is pretty predictable at this point, given all the tightening that has happened. But because of the peculiarities of the labor market in this cycle, I don't think I can say that with a great deal of confidence. I think that the likelihood of that is quite high. That's what the Fed is hoping for. And that will determine what the path of growth is in the fourth quarter of next year.
The reason I ask this is because I think the overwhelming consensus going into 23 is for a softer period of growth through the first half. But HSBC pushed back against that yesterday, with Max Kettner saying the following: we increasingly believe the widespread belief of a weak first half is misplaced. He went on to say that activity data is still surprising to the upside. Both top-down, bottom-up expectations have been downgraded so much in recent months that it makes further positive activity surprises likely. Krishna, what do you make of that assessment?
I agree with that. I think the likelihood of, given both anecdotal and kind of systematic data that you can look at, expecting meaningful slowdown in growth in the first half, I think is misplaced. We will see, if we do see slowdown in growth substantially, that will probably come in the second half rather than the first half. And therefore, and that's a bit of a challenge for the Fed, because without that, the labor market is not going to soften. So they can't, they have lost the narrative a little bit, and they can't afford to lose the narrative even further. And that's why they will keep, or at least I expect them to talk about the SEP and the projections and keep harping on that in this meeting and even in subsequent meetings.
Bob, what about you?
We've studied the previous periods of Fed rate hikes, and we've looked at the last 5. And the interesting thing to us is the time from the last Fed rate hike until recession, and it's happened 4 of the last 5 rate hiking cycles, has been about 13 to 14 months. So those long and variable cumulative and lagged effects of monetary tightening, they do bite, but they don't bite in the next couple quarters. It takes about a year for them to bite. We think that moves forward, so we're with Krishna that recession is the latter half of next year, because the new ingredient this time is quantitative tightening.
So, Bob, we've got to talk about what that means for spreads. A lot of people have been pretty relaxed about how far credit spreads can break out on high yield. You haven't been one of them, Bob. We're at 426 right now. What are you advocating for at the moment?
So, for sure, there's a tremendous support for credit. And the one part of the credit spectrum we aren't that favorable on is high yield. We think in recession, high yield credit spreads go to 800 over, and I'm still convinced they are. I'm hearing a lot that, hey, these companies have termed out their debt for the next couple of years. They're much higher credit quality. True, but this time a lot of risk resides in the floating rate market. And there are 3 things to remember about the private credit and the floating rate market. One, for the first time, the private credit market is the size of the public high yield market. They're each $1.25 trillion. The second is the credit quality of the floating rate bank loan market is substantially lower than it's ever been. If you go back to the financial crisis, debt to EBITDA was 4 times. Now the median is about 5.5 times. And then lastly, this is where the refinancing wall is. Most of the debt that's been put in place in 2020, 2021, in the early part of 2022 was about 4%. As these companies have to refinance, they're refinancing at 9%. And these are the companies that are the lowest rated and least capable of affording that higher financing rate.
Bob, could you take it a step further? Could you just take it one step further? Could you explain to all of us how the risk embedded in private markets that you've just described has the potential to bleed over into public markets in a much more material way?
It bleeds over in a lot of ways. As these companies go through restructuring, that's less economic growth. Of course, some of the largest clients of corporate America are other corporate clients. So if they're having trouble with some of their suppliers, their vendors, or their customers, they're going to feel that impact. And I also worry that as you see these problems emerge in the private credit market or in the floating rate market, the one avenue to de-risk is going to be in the public credit market. Look, I've seen this cycle every single time in the past. The Fed finishes tightening rates. You have about a year till recession. In that period, you have all this talk about a soft landing. It's happened once. It happened in 94, 95. So we did have the soft landing in 95, and guess what? High yield credit spreads were at this level. So the market's pricing in soft landing.
Krishna, final word.
Well, so I agree with Bob. I think expecting the credit spreads, if we do see a recession, expecting credit spreads to not widen in basically every credit category is just unrealistic. And I think even expecting them to not widen much is very, very unrealistic. If the recession scenario pans out, credit spreads are going to widen, and they're going to widen dramatically.
I need to get to Mike McKee because he's down in Washington, D.C. We're a few hours away from that rate decision from the Federal Reserve, and then it's the news conference with Chairman Powell. Mike McKee, the focus for you. You know how Bob Michael always likes to give you a question before you even get to speak? I'm going to let you speak first, Mike.
All right, but I'm looking forward to Bob's question. This is going to be an interesting meeting because, as you pointed out, this has been sort of the pattern for the last year. The Fed raises rates, and Jay Powell comes out and gives a sort of hawkish news conference. We're kind of at a show where the actors have been giving us the plot before we even get the curtain up. And that's what's likely to happen today. 50 basis point move is all but baked in, takes us to a range of 4.25 to 4.5%. Guidance that we will see more rate increases, and a warning to Wall Street, they'll keep the terminal rate in place for longer than people anticipate. We also get the new economic forecasts and the dot plot. Now, that's going to be interesting. To Krishna's point, unemployment, they only forecast it would go to 4.4%. Not very much when you're raising rates as much as they have, and then they had it going down to just 4.2%. For inflation, 3.1% next year, down to 2.1% in 2025. So it's going to take a while to get back to their target. How much do either of those variables change? And then the dot plot, that's what everybody's going to be looking for. That terminal dot up top there on the green line, does that move up significantly, or do they keep their options open? And what about the spread? You look at how tight 2022 and 2023 are. Does 2024 come together, or is there a lot of division about where they're going? Those are the things that we're going to be watching for today.
Mike, stay close. Bob Michael, the floor is yours.
Mike, if you go early, you can ask him that he's talked consistently about wanting positive real yields out across the curve. Now you have that by two important metrics. One is the TIPS curve. In the front end, you've got positive real yields of about 2%, and the long end, about 1%. If you try to estimate where the Fed funds rate is out in the future, we're looking at the overnight index swap, the OIS curve deflated by inflation swaps. It's now positive going out pretty much to infinity. So he has what he's asked for. Does that mean he can pause? If you go last, then you throw away the Marcus of Queensberry rules and you ask him, does the chair believe that the current bout of disinflation is transitory?
Mike McKee.
Good questions, and we will. I'll put both of those on my list, along with my question about France or Morocco at the
I know the counter programming for this is ridiculous.
No, look, guys, you have it wrong. FIFA does not stand for football. It stands for fixed incomes fashionable again.
Is that right? Is that your new tagline? Bob Michael, can you be honest with our audience? When that news conference starts, are you watching Chair Powell or the football at JP Morgan?
I'm going to have them both on.
I'm sure you are. I will too, and I'll be on TV. Mike McKee, thank you, sir. Bob Michael, Krishna Mamani, sticking with us. Coming up on this program, the US poised to give Ukraine's defense system a bit of an upgrade.
We do maintain a robust dialogue with our Ukrainian partners, with our allies, and our international partners on Ukraine's security assistance needs, to include battlefield capabilities that they may need, as well as air defense.
That conversation up next.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news, you will get insight into limitless possibilities. Before you change the world, Bloomberg.
We recognize that with the air threat that Russia poses to Ukraine, that air defense continues to be a priority topic of discussion when it comes to security assistance. And so we'll continue to look at ways that we can best support Ukraine to protect their population and to protect their broader infrastructure to be able to survive these attacks.
The Pentagon set to ramp up support for Ukraine to fend off Russian attacks. A decision to send the Patriot air defense system awaiting approvals from Defense Secretary Austin and President Biden as Russian drone targets the Ukrainian capital Kyiv this morning. Ukraine's general staff has reported 11 missile attacks and more than 60 launches of rocket systems in the last day alone. Bloomberg's Josh Wingrove reporting from D.C. on this. Josh, can you get us up to speed on when this decision will ultimately be made?
Yeah, it looks like maybe in the next number of days they could make this decision, but that is different from how quickly these things will get on the ground. These Patriot systems are very complicated. They require typically large crews. We don't even know which version of the Patriot system would be going to Ukraine. So the time from decision to time from sort of missiles ready to go into the air is the big question mark. We just don't know the answer right now. But these would be the most sophisticated systems, and they're aimed at exactly what we're seeing in Kyiv this morning, which is these long-range attacks that are targeting, in some cases, power infrastructure, domestic civilian infrastructure. Having Patriot missiles is something that Ukraine has been asking for a long time. It's one of those things near the top of the wish list to try to boost the chances that they can pluck these missiles out of the sky before they hit a power station or what have you. And the West, of course, is taking steps right now to sort of invest and rebuild these power systems. You don't want to be doing that if a missile is going to come back a week or a month later and just blow it all up again. So it's kind of like, it seems like an implied insurance policy for the efforts of the U.S. and its allied countries to rebuild this civilian target that targets that are being hit by these missiles. But it is the latest in a drumbeat of increased munitions going from the U.S. The Biden is consistently sending stuff that at the start of the war he did not want to send.
Josh, just briefly, can we touch on that? Well understood as to why they want them, why we might send them, why the reluctance to send them, why might they make the decision not to?
The reluctance is around escalation and counteroffenses, and the U.S. has been very cautious about being the one to sort of up the ante in a way that would give Putin an excuse to go even further than he's gone. Now, the thinking has changed for a number of reasons. One of that is he seems to be going pretty far anyway. Now, as for whether these Patriot missiles will help counteroffensives, analysts will tell you that other systems like tanks and other missile systems would be actually what they need to sort of launch attacks deeper into Russia. This isn't about that, and that probably gives some calm to the Americans, but it's still very complex. As I say, firing these things is tough. So this is one they're grappling with. That's why I think we're hearing signals that no final decision has come from the Defense Secretary and from Biden himself.
Hey, Josh, looking out for your reporting through today and into the weekend. Josh Wingrove there down in Washington, D.C. The team at Bank of America writing this on crude, and this is important. Russian sanctions, low inventories, China reopening, an OPEC that's willing to cut production in case demand weakens, keeps energy prices high. Their call for next year, look at these numbers. Brent crude could average 100 per barrel over the course of 23 and spike in the second half of the year to maybe 110. A final word now with Bob Michael, Christian Mamani. Bob, you mentioned China reopening. We've got to talk about the war in Europe as well. This has been another impetus to make calls of higher, stickier inflation through much of this year, Bob. How do you think about these issues going into 2023?
Well, there are two things that we all hoped would have been resolved, that there would have been some sort of resolution between Russia and Ukraine, and there would be something which would allow China to reopen. It looks like we're going to get one, not the other. It turns out to be the worst combination for inflation, because where you would have gotten some energy production back into the markets again with some peace in Russia, Ukraine, it looks like it's going the other way. So that's not going to happen yet. With China reopening, the demand for energy to run those factories all out, and for also to people to get out and spend and consume and travel around, that demand is going to be there. So I'm sympathetic to seeing the price of oil back at $100 a barrel.
Krishna, final word.
Well, I think it is a possible scenario. I somehow don't think it is the likely scenario, and the driver for that is really a slowdown, a modest slowdown from really high level of activity in this quarter and in the first half of next year, both here and in Europe.
To the two of you, this was absolutely excellent. Thanks for your time. Bob Michael, Krishna Mamani, thank you very much. Looking ahead to the Federal Reserve, and at the same time, not at the same place, we'll be watching the World Cup taking place over in Qatar, I'm sure, competing with Chairman Powell in that news conference. Equities right now on the S&P 500, just a little bit negative, down 0.1%. Coming up, the morning calls in later. The latest inflation print, providing some relief for the Fed. Kathy Jones and Charles Schwab looking for 50 today and 25 basis points in the first quarter next year. More on that around the opening bell.
Satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
2 days of gains coming into Wednesday. This morning, equities down by about 0.1% on the S&P, on the Nasdaq down by 0.2%. Chair Powell, Fed decision just around the corner. Let's get you some morning calls briefly. Bank of America downgrading Best Buy to underperform, $69 price target, citing a challenging demand environment. That stock is down by almost 4%. Citi downgrading Marriott to neutral, 175 price target, expecting more macroeconomic and capital markets uncertainty. That stock is down by 1.3%. And finally, Goldman cutting Tesla's price target to 235, citing softer demand and macro conditions. That stock down again this morning by 1.5%. Coming up, less than 24 hours away, counting down to Chair Powell's news conference. That conversation with Bank of America's Mike Gapin and Kathy Jones and Charles Schwab. Up next, your opening bell with futures lower by 0.1%, just around the corner.
more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It is Fed decision day. We are 22 seconds away from the opening bow this morning. Good morning to you all. Futures are lower, negative by just 0.1%. Two-day winning streak coming into Wednesday. On the Nasdaq, we're down about 0.2%. On the Russell, the small caps, just a little bit softer. The opening bow in New York, ringgit, switch at the board and get to the bond market. Yields much lower since this Fed last met. On a 10-year right now, unchanged at 350. Highs for the year of about 430. Look at a 2-year this morning. The 2-year in early November had a little look at 480. This morning, 420. In the FX market, big turnaround there as well over the last couple of months. Euro dollar from sub-parity back to 106.40, firmer again this morning by 0.1%. And just to round things up, crude right now 76.74, up by 1.8%. 20 seconds into the session, your equity market dead flat, unchanged on the S&P 500. On the Nasdaq, we're down by about 0.1%. If you want to move, one stock to watch at the open is Delta, the company boosting its profit outlook and keeping a bullish travel forecast. The CEO saying this in a statement: demand for air travel remains robust as we exit the year, and Delta's momentum is building. Katie Lyons, it never ends.
It never does. We're going to be paying a lot for airline tickets for some time to come, it seems, John. But it also is boosting Delta stock. It's up more than 3% at the opening bell and taking some of those air carrier peers along with it, the likes of United and American, even JetBlue, all gaining by about 1% at the opening bell. Now, what the numbers actually look like for Delta, they have raised their fourth quarter profit forecast to between $1.35 and $1.40 a share. That is up from the earlier guide with a high end of the range at $1.25. For the full year, they see up to $3.12 of profit. Analysts were only looking for $2.89. What is so interesting, though, is they actually narrowed the revenue view. They now say sales will increase about 7 to 8% this quarter. The earlier range went up to 9% growth. So a narrower top line view, wider bottom line one. Clearly margins going to be a lot fatter than analysts were expecting, thanks to those elevated ticket prices. And to that point, just take a look at revenue per average seat mile. The last 2 quarters, Delta has posted the highest revenue per seat mile flown ever in data going back to 2007, up north of $18. And this points to the strong demand that Ed Bastian was talking about. What is so interesting, though, is we have to contrast what we're hearing from Delta today with what we heard from other carriers yesterday. JetBlue warning that the holiday period, the fourth quarter, demand is shaping up worse than expected. Alaska narrowed its revenue forecast, noting a softening in corporate travel bookings. You also had Spirit reducing its capacity forecast. So interesting, the divergence here between lower cost carriers and the major carriers, and maybe who is ultimately willing to pay this much for airline seats.
It's going to be a big question going into 23. It was a big question coming into 2022 as well. Down to right now up by more than 3%. Katie, thank you. Tesla down by about 1% this morning from September. Lisa was saying earlier this morning on Bloomberg Surveillance, it's down about 50% since September. Investors pointing the finger at Twitter, others, including Goldman, citing softer demand concerns. Elon Musk firing back, tweeting the following: Tesla will be great long-term, but doesn't control macroeconomic tides. Let's get to Ed Ludlow on the West Coast some more. Ed, which one is it? Are we blaming Twitter here in that relationship, or is it the demand backdrop?
It seems to be all of the above. It's hard to unpick. We're down for a third straight day. We're down in 7 of the last 8 sessions. We're coming off the worst 2-day drop for this stock since April. Elon Musk has been tweeting about macroeconomic conditions on more than one occasion in the last week. He's also been tweeting quite a lot about the Fed, saying beware debt when the Fed is raising rates. You know, I continue, John, to talk to investors on the institutional side, and also remember how influential the base of retail investors are for this stock. These are people that own the stock in kind of meaningful volumes and are also owners of the vehicle. And as one, you know, fan of Tesla, Elon Musk, put it, that we've never seen this community more divided than they are right now. Many of them are looking at the news flow coming out of China and saying, you know, we want to hear from you, Elon, about what's happening on the demand side in China. As you know, John, Bloomberg reported that there's a pullback in production in terms of the hours per shift and also onboarding new staff. Tesla's also cut prices in that market. That would indicate it's a demand issue. On the other hand, it's also standard practice for Tesla to hit pause on the assembly line at quiet times of year to make maintenance. Bloomberg's also reported that. I would also say that Adam Jonas from Morgan Stanley is out with a note this morning where they've downgraded their EV penetration outlook for the US market by about 2 percentage points for 2025 to 11%. You know, it's as if this market's kind of losing steam. Now, there's also downward pressure, of course, from what's going on at Twitter, because as Bloomberg's reported, Musk is considering scrapping the unsecured debt in favor of margin loans secured against the stock that, as you say, is down 50% since September, I believe, right? So, gosh, there's a lot at play here for a single name.
That disconnect between the Nasdaq and Tesla is quite something to see. Ed, thank you, sir, as always. Looking at the broader market, about 4 or 5 minutes into this, we're positive by 0.2% on the S&P and the Nasdaq, up 0.2% also. Counting it down to Chairman Powell a little bit later. This is what Mike Gapon of Bank of America has to say, looking for a hawkish message from the Fed chair. Services inflation remains too hot. We expect the Fed to emphasize that more work needs to be done, particularly in labor markets where demand outstrips supply. Mike, I'm pleased to say, joins us right now. Mike, can you build on that? What you're looking for a little bit later this afternoon?
Right. Good morning, and thank you for having me on. So I think the first part of the message will be a positive one, that it does look like we're past peak inflation, and falling commodity prices and declines in goods prices are what's responsible for that. So on one hand, some very good and very welcome news, but I think the Fed will then step back and say, look, our goal is more than just putting inflation on a downward trend. The goal is to get it back to 2%. And in that regard, the labor market remains too hot. Labor demand is outstripping labor supply, and services inflation is still inconsistent with 2% outcomes. So more work needs to be done on that point. So good news, but the hard work, to use Powell's language, the hard work still lies in front of us.
And Mike, this has been one of the big features, I think, of your call alongside the rest of the team at BofA going into next year. You still believe that risks are skewed to a higher terminal rate. Now, Mike, what's that relative to? Market pricing, the dots in the dot plot from September? What is it?
I think to market pricing and just that. Look, we don't really know exactly where, you know, sufficiently restrictive is, right? And so the Fed's feeling its way at this point in time, and the Fed's message can be, more balanced at this point, because it will ultimately be data dependent. But the labor market's going to drive what constitutes sufficiently restrictive, and there we're still adding 272,000 jobs per month over the last 3 months, and the wage data all suggest things there are pretty strong. So I think upside risk in terms of exactly how much tightening will be needed to begin to remove some of those imbalances in the labor market suggests, I think, still risks to a higher terminal rate. When that may happen, of course, will depend on how the economy evolves. But so good news, but not all the way there yet from the Fed's perspective.
Well, let's put some numbers on it. So you're on the same page as Goldman, with Hadsius, at Citi, with Hollenhorst, BofA, all three of you, looking for 5 to 525 for the median dot next year. So when you say upside risk to that, Mike, what kind of number are you thinking about?
I mean, maybe it's not, I don't think it's unreasonable to think that ultimately we may need to be in the 5.5 to perhaps 6 range. Again, whether the Fed just kind of keeps edging its policy rate higher and we would get there, say, in the middle of next year, or the Fed pauses for a while to kind of see how this inflation evolution plays out and maybe has to come back in to do more work later. I think that all remains to be seen. But the point here is simply to say 2% outcomes will be predicated on getting labor demand and labor supply back in balance. The Fed's done a lot of work already, but employment growth and wages are still pretty strong, and the consumer has some momentum to its spending. So I just think it's unsure exactly where that appropriate terminal rate is. And, I'm not sure 4.75 to 5 would be enough. And I'm not, I think 5 to 5.25 will be enough. But I think the labor market is telling you things are still pretty strong underneath the hood.
Interesting. Mike Gapin, this was great. Of Bank of America, Michael Gapin there. Wonderful to catch up with you, sir. Thank you. Kathy Jones at Charles Schwab, waiting patiently, listening to that. Kathy, I'd love your thoughts initially on what Mike Gapin had to say.
Well, I generally agree that it's the labor market that's going to drive the Fed's decision-making over the next year or so. I would tend to be in the camp, though, that says 5% is plenty in terms of the terminal rate. I think the evidence is building that we have passed peak inflation, that we are seeing softening in the economy in a number of different areas, and the global economy still feeling the effects of all the tightening, the cumulative tightening over the last year or so, really just kind of working its way through the system now. So we think the surprises in the next set of data over the next 6 months or so will be to the downside, and that'll give the room for the Fed to kind of halt their tightening. I think the problem today for Powell is he doesn't have enough information to make that call. So today's message will likely be, yeah, we're pleased with the way things are going, but I would agree more work to be done. And I think the market's not quite ready for that message.
So, Kathy, are you unconvinced by the argument that Mike offered that this labor market will be ultimately too tight and the risks are skewed to the upside for Fed funds, that maybe 4.75 doesn't get it done? Why doesn't that convince you?
Well, we're seeing more softness in some of the underlying employment data that I think than others are seeing. And there's even a study out today from the Philadelphia Fed saying that the benchmark revisions may actually subtract some jobs, pretty considerable number of jobs. But, at the end of the day, it's the Fed's call. So they seem to think a 5% Fed funds rate is a good terminal rate, that's probably good enough. That doesn't seem unreasonable to us, but I think the surprises will be on the soft side. It sort of begs the imagination that we could have had all the major central banks of the world, along with a bunch of emerging market central banks, tightening policy over the last year, quantitative tightening, and yet, we're not going to see inflation slow down. That just doesn't seem consistent.
So, Kathy, from listening to you, there's a disconnect here between what the Fed will signal potentially later on this afternoon and what you think is achievable. Kathy, I don't think you're alone. So with that in mind, when they come out later and they potentially signal a much higher terminal rate, maybe it's just below 5, maybe it has a 5 handle, that median dot in 2023. How do you think the market's going to respond to that incoming information, Kathy, given that you have doubts and you're not alone?
Yeah, I think that's the conundrum we're facing right now. Does the curve steepen, or does it flatten and invert more? I think the initial reaction, the short end seems a little rich to me. I think we've priced in, a Fed pivot, lower rates down the road, and I don't think that's the Fed's signal. So I think the short end is vulnerable to repricing along a different path of Fed funds. The long end, we've been in the camp that saw long-term rates coming down. Now at 3.5, we're kind of at a place where we think it's a pretty reasonable value. We do think there's a risk of going down to 3% next year, but it probably is going to be a bumpy ride. So I'm a little concerned about how the short end is priced going into this announcement.
Questions for Chairman Powell in the presser. Kathy, have you got one?
Yeah, I would love to understand more about how the Fed views quantitative tightening and its impact on the economy. You get mixed messages about its importance to the Fed in terms of setting policy. I'd like a clearer message on how they see that going forward.
Kathy Jones, I'll tell Mike McKee. I'll do our best. because I think he's got a long list of questions from Bob Michael as well. Kathy, it's good to catch up, as always. Your equity market looks like this. About 12 minutes into the session, we're positive by 1/3 of 1% on the S&P. On the NASDAQ, we're up by 0.2 of 1%. Yields come in just a little bit, only by 3 basis points. No drama. We're on a 2-year right now, just sub 420. On a 10-year, 349. We're down by just a single basis point. Coming up on this program, Sam Bankman-Fried facing a long legal battle ahead.
It's so hard to compare these things, but I think it's fair to say that by anyone's lights, this is one of the biggest financial frauds in American history.
That conversation up next.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
The secret success of any company is to grow. And I think that we, WPP, and our industry more broadly, can be really at the heart of a client's growth. How do they succeed with consumers? How do they reach them in new areas? How do they innovate? How do they create new brands?
It's so hard to compare these things, but I think it's fair to say that by anyone's lights, this is one of the biggest financial frauds in American history. This investigation is very much ongoing, and it is moving very quickly. In terms of whether we're going to bring charges against anyone else, look, I can only say it this clearly, but we are not done.
FTX founder Sam Bankman-Fried remains in jail ahead of the Senate FTX hearing later today, following a day of scathing testimony from the new FTX CEO on Capitol Hill.
The FTX group's collapse appears to stem from absolute concentration of control in the hands of a small group of grossly inexperienced and unsophisticated individuals who failed to implement virtually any of the systems or controls that are necessary for a company entrusted with other people's money or assets.
Pretty brutal stuff. Team coverage starts right now with Bloomberg's Sonali Basak, AMH down in DC as well. Sonali, first to you, what can we expect a little bit later?
A few things. Remember, the chairman of the Senate Banking Committee, Sherrod Brown, has been very skeptical of digital assets. And you have Pat Toomey, who himself has said he bought the hype and by the end of the year is trying to pass a narrow bill to regulate digital assets in some way, though he wanted a larger framework. Remember, testifying today, we also have two celebrities, including Kevin O'Leary, who took money from Sam Bankman-Fried himself, who supports digital assets more broadly here. But then you also have Ben McKenzie, another celebrity, who has said that, you know, he's used to lying. He's an actor, but if you look at the crypto industry, it's full of lies itself. So that's what we expect at the onset of the hearing. Remember, Cynthia Lummis is also part of this particular committee. There's the Lummis-Gillibrand bill that they wanted to pass regarding digital assets, and then Elizabeth Warren, also part of this committee as well, and Elizabeth Warren introduced a new bill today to combat money laundering in the industry, to extend know your customer rules that are in the banking industry already and extend them now to digital assets. So in addition to a lot of rhetoric, as we've been hearing for the last couple of days, remember Sam Bankman-Fried, his presence having loomed very large within the U.S. Capitol, very clearly so with all my conversation with lawmakers on the sidelines of these hearings, John. In addition to this debacle, figuring out the path forward is definitely a key concern for these lawmakers.
Sonali, out of interest, the relevance of bringing celebrities to testify, why is that important?
Well, first of all, Sam Bankman-Fried is not here himself. Remember, even before the arrest, he did not accept the subpoena from this committee to be here himself. But the celebrities, remember the SEC has targeted celebrities for pumping up cryptocurrencies. There are also two academics here as well that I'll speak to the issue of leverage in the system. So you have kind of both sides here, the responsibility for the correct type of marketing to the American retail investor, as well as the nuance here between these brokerages and exchanges that have gone virtually unregulated for so long, and a recognition here that maybe they should have been much sooner.
Looking forward to your coverage of it. AMH, want to come across to you. You've been following this story around campaign finances. What's going to happen with that money?
Well, that's a great question, Jonathan. And as Sonali was saying, that is why this story is hitting so close to Washington, because so many politicians were lured in by these big donations, and a lot of them we already see have either given money back to charity that was given to them from Sam Bankman-Fried or one of his top lieutenants, or they plan to. What we do know is that from the DOJ, remember it's the DOJ, the CFTC, and the SEC that he has all come under fire from, but the DOJ, it's 8 criminal counts. And one of them is about charges of violating campaign finances. So they're going to have to do a lot of digging on this. Potentially some of these super PACs will have to give money back. So far they have not. But that's what this is going to come down to. There's a criminal charge against him about this. And obviously it's incredibly embarrassing for a lot of these politicians.
Anne-Marie, let's talk about those politicians. How are certain politicians, maybe in the opposition party, using these hearings as a moment to message, and message pretty hard?
Well, there want to be messages on the Republican side, of course, because he was #2 in this election cycle in terms of giving to the Democrats, right? He was a big mega donor for the Democratic Party. But as you heard from the attorney yesterday from the Southern District of New York, he gave to both political ends, especially when you look at his deputy, one of his top lieutenants, who really gave heavily to the Republican side of the aisle. But what I think what you're hearing from the Republicans is that they feel that the Democrats were cozying up to him. But it really could be seen on both sides in terms of the money that was coming in. Democrats and Republicans, really no one was hands off when it comes to Sam Bankman-Fried trying to, as this is what Damian Williams said, dirty money used in service of Bankman-Fried's desire to buy bipartisan influence and impact the direction of public policy in Washington.
This is unraveling very, very quickly. And Sonali, I just wanted to give you a final word on that. Unraveling fast, but it still feels like we're only scratching the surface. This is just one individual. Sonali, how many others do you expect to be brought into this?
I think you have to expect here that everybody that was in his inner circle will be taken a hard look at. When I talk to lawmakers on the side down here, what they say too is very often when they were meeting with Sam Bankman-Fried, they were also meeting with his parents and his deputies over at FTX as well. And so how far does this go? Who knew what? The SEC complaint very strongly outlines that Sam Bankman-Fried was more involved in Alameda than he himself had said. So what else don't we know, John, is going to be found out over the next several months or so? I'm sure this will take a long time to unravel.
Looking forward to the hearing, which commences in about 8 minutes' time. Shanali Basso, KMH, to the both of you. Thank you, as always. About 22 minutes into the session, our focus shifting, of course, to that Federal Reserve decision. Right now, the S&P up by 0.4%, the Nasdaq up by around about 0.25%, with some sector price action. Here's Kaylee. Hey, Kaylee.
Hey, John. Well, as we've gained some steam, most sectors also have moved into positive territory. The leaders early on include utilities, consumer staples, and technology, which is why you're seeing the Nasdaq up a little bit here. At the bottom, though, materials and communication services. Within that index down about 0.3%, but you zero in on media and then on cable, that's where you see the real underperformance, because Charter Communications is down 14%, worst day for the stock since March 2020, and this is a CapEx problem. The company unveiled a 3-year network spending budget that is bigger than analysts anticipated, and clearly not liking that in an environment in which you have to spend more to spend more. The cost of capital is rising. Charter, therefore, falling by 14% and taking some of those cable peers down with it, John.
Kelly Lyons, great work as always. Up next, your trading diary from New York City on this Fed decision day. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close. Welcome to Bloomberg Crypto.
Three-day rally on the S&P 500. So far, so good. Monday, Tuesday, Wednesday. Equities up this morning by 0.4% on the S&P. On the Nasdaq, up by around about 1/3%. Will it stick going into the Fed? Let's get you the trading diary. That was the price action coming up. The FTX testimony on Capitol Hill continues at the Senate. In the Senate, at the top of the hour, President Biden speaking at 1:30 Eastern Time. A Fed rate decision coming at 2 p.m., followed by Chairman Powell's news conference. Football match happening at the same time. Of course, I'll be so focused on the one thing, the Fed. Rate decisions from the BOE and the ECB coming up on Thursday, plus another round of jobless claims. Retail sales in America still to come. And we round out the week with PMIs on Friday. From New York City, this was the countdown to the open. I'll see you a little bit later for Fed coverage. Good luck for the rest of the trading day. This is Bloomberg.
Lost.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari-sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks.